on the market right now. We're worried less about supply and more about dwindling demand for the new year.
It is the conversation going into 2023. That was Stephen Schork there, the principal at the Schork Group. Let's check out the markets for you. Inflation data in America coming out a little bit later this morning. Equities up by 0.5%. Marco Kolanovic over at JP
Now
Morgan.
what?
Underweight.
We shift our equity allocation to a moderate underweight.
Yeah, I saw that.
From overweight. We trim risk in commodities that maintain a sizable overweight and fund these by increasing our allocation to corporate bonds, Tom, and cash. Kalanovic, yesterday. What do you make of that? Right at the end of the year, after all the losses and after being overweight through much of
careful here, John.
22. Speak your mind, Tom. Speak your mind.
We have a great humility here, folks, for people that nail it. Think Mr. Wilson this year and others.
Great year.
And people that maybe miss it on the x-axis, but they stay where they are and they say, out there somewhere, we still see our framework. I'm going to pick this morning on the wonderful John Stolfus at Oppenheimer and Company, who's been bullish and has stayed that way and is looking pretty good here after what we've seen. And then you've got these people, Mr. Kalanovic could be right. He could be correct here, but it is an odd swing and a late swing, to say the least.
Our view is that market and economic weakness may occur in 23 as a result of central bank over-tightening, with Europe first and the US to follow later next year. The issue that many people have is that the view of many other people is they've been grappling with that story, Tom, for the last 9 months.
I'm going to, with great respect to these strategists, it's always brutal. And this year, everyone to a person says, like Lori Kelly
tremendously difficult.
Tremendously difficult. But what I like is when they're clear, and to Mr. Kovanovic's credit, he's been very clear in the last number of weeks as he ebbs away from, is it safe that I should call him a previous Uber bull?
I think you can call him that. Just look at the forecast to start the year.
Maybe he's a lift bull.
I'll talk about that later this week. Just the forecast to start the year, year end, radically different.
Do we have any news on the current Bankman-Fried and all in the last 10 minutes? I don't think we do.
Not right now. I think everyone publishing. Mike Allen over at Axios published just moments ago, Tom, and it's the opening line for the ages that we'll have to wait. The testimony that we thought we were going to get at 10 a.m. a little bit earlier, a little bit later this morning, I would like to start by formally stating under oath, I effed up, is what he was planning to say.
I think that's appropriate for radio. We'll go with it this morning as well. We're going to continue to follow the story again. Shonali Bassick and Amory Horton in Washington. We have inflation here in 2 hours, and part of inflation has been your gallon of gas, and for business diesel. Amrita Sen has been of huge value to Bloomberg Surveillance and Bloomberg Worldwide and joins us now from Energy Aspects. Amrita, is oil disinflating or is it becoming a true deflationary item within the reports at 8:30?
I mean, look, in the near term, it's obviously been deflationary, right? We've seen oil prices collapse, but I will say this has got very little to do with fundamentals. Yes, there were good fundamental reasons why, we were expecting a rally into year-end that didn't materialize given the new Chinese lockdowns, French strikes, all of those factors, right? Sure, we should have probably been in the low 90s, late 80s, but not collapsing down to where we have. I'm talking about Brent here, of course. This has been a massive year-end liquidation event. Lots and lots of funds have liquidated. And I think that's what's dragged prices here. And that's obviously been deflationary, at least in the near term. I just don't think this is going to last.
Well, it's not going to last, but when's it going to go? And what will make it go? Is it a sense of Pacific Rim demand? Is it global demand? Or is it some supply adjustment?
I think it's going to be demand. And I think it's going to be Asia, China in particular. That's going to be the biggest driver of oil markets next year. They are finally giving very clear indications of reopening. So far, we've been very cautious and we've been kind of expecting April onwards. But yesterday we put out a note, we raised our Chinese demand numbers because these are the very first concrete they have taken. And I think that is meaningful. Again, it doesn't mean overnight China can reopen. It will be a slow, gradual reopening. But imagine, Tom, it's been 3 years come February that China would have had COVID. We've seen the kind of pent-up demand in the West when the West opened up, and you're talking about billions, 1 billion plus people, the pent-up demand is going to be huge. And you'd appreciate this. It's the multiplier effect. The impact it's going to have on the rest of the region, Korean exports, Thailand's tourism, everywhere. I think that's where the big demand push is going to come from.
So why is that not being priced into markets at all? Why is nobody following through on the story that everyone seemed to be on board with not so long ago, that a reopening in China would be bullish for oil prices?
I'd say so two things. For me, one, I have a feeling this is we need to see it to believe it, because we've had a couple of quote unquote false starts, right? Even earlier this year, people after Shanghai were expecting loosening of restrictions that didn't quite materialize. And they are still not buying crude in the market the way they used to. That's because they bought a lot of crude in November. They need to run that down. So I think both of those things need to coincide. And more generally, it's year end, right? If people have squared off their books, they're not going to necessarily put on positions now. Having said that, if you look at the curve, if you look at the price set right now, for 2023, it does look extremely attractive. You don't need major supply losses to tighten this market up. Just the end of the SPR and China reopening does provide some huge bull cases for next year.
Yeah, I was going to say the Strategic Petroleum Reserve releases are still ongoing. The last one having just been finished with respect to the distribution. How much has that influenced the price?
Hugely. If you take a step back this year, what has actually happened is that we haven't lost much oil at all from the Russian invasion, right? Because the embargo has just only kicked in. Since the invasion, we have had 270 million barrels of global SPR released, and maybe 500,000 barrels of Russian losses. So you can do the numbers. And yet, commercial inventories, yes, we've built, but only built by about 150 million barrels. So had it not been for the Strategic Petroleum Reserves, we would have run out of oil in several places.
And really sad of energy aspects. Not the year end to crude I think many people were looking for. Great to catch up as always. If you are just tuning in on TV and radio, this morning has changed. At 10 a.m. Eastern Time, we were expecting testimony from Sam Bankman-Fried to the House Financial Services Committee, led by Maxine Waters. And then in the last hour, this headline from the SEC, Bankman-Fried, Tom, charged with defrauding investors.
Yeah, the charge of defrauding investors doesn't capture it, John. You were great about reading out the testimony. I went to one item on tokens as well, but I just think charge doesn't, I've seen charges from the SEC, and they're never fun. I mean, these are, civil criminal issues, but this is line by line going after him. I mean, there's no padding in this statement.
Lisa, you're better at this than I think many. The defense of this individual, what did you make of the media tour? Is there a suggestion within the media tour of the last month of the line of defense that he's trying to take?
Incompetence. Just being clumsy.
Naive. We didn't know.
Exactly. I messed up. My intention is to make everyone whole. I am so sorry. I feel like I've failed. It's my misdoing. I didn't necessarily have any engagement with Alameda. If you look at the statement that he prepared for the congressional testimony, he says, I was no longer in charge of Alameda, the personal trading arm that the SEC accuses as being his private crypto hedge fund. He was saying he had no knowledge of what was going on there. So this is partly a plea of ignorance and incompetence.
But I'm going to take real issues here. This guy's physics mathematics from the Massachusetts Institute of Technology. This ignorance thing drives me mental. Just drives me absolutely nuts. This kid was a sterling high school student in doing math.
I don't think that's a character assessment of Lisa.
I'm just saying.
No, I'm not talking about Lisa. I'm talking about I'm sick and tired of the media telling us, woe is me, this guy is so dumb. So come on, he's physics math
I think we're
from
all on
MIT.
the same page, Tom. Lisa, we're all on the same page on that.
We're getting accolades worldwide. You know the pinata I've been for my feeling on BitDog?
Well, but Bitcoin has been holding in. There is a question and a distinction.
69,000 to 17,000?
But there is a distinction right now. And the line is important to draw. We don't know how thin that line is. We are going to find out.
Croatia.
What we're going to find out is what over the next couple of months, who else is going to be indicted here? Who else is going to be drawn into this web? How broadly within the crypto sphere, or is this the bad actors? When you speak with crypto people in the industry, they say, we welcome this. We want to weed out the bad actors so that we can get back to what we do. Whether that story sticks is what we're going to see.
What do they do? I'm asking for Nora Rabini.
Who's they?
The industry. What do they do besides promise people? There's a banner at the World Cup. Crypto.com, on their website, they promised you, John, 8%.
I think they're going to struggle to attract the capital that they've been attracting over the last several years.
8%.
To Lisa's point, he spent the last month talking about being clumsy, naive. The SEC this morning saying it was systematic, suggesting it was deliberate, and accusing Bankman-Fried of defrauding investors. More still to come from New York. This is Bloomberg.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
Today, what are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
The secret success of any company is to grow. And I think that we, WPP, and our industry more broadly, can be really at the heart of a client's growth. You know, how do they succeed with consumers? How do they reach them in new areas? How do they innovate? How do they create new brands?
I think 2023 is opening the door for a recession.
We're expecting either slow growth or a mild recession.
There's a lot more signs now of a pretty clear inflection point in both the growth and the inflation numbers.
What we've had is the flop, and we're still kind of waiting for the chop.
You got to concentrate on, I think, surviving the difficult start to next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
What a 24 hours. CPI, 90 minutes away. Inflation data in America. Tomorrow, the Fed decides. And Tom, this morning already, the SEC charging Samuel Bankman-Fried with defrauding investors. Talk about the news flow this morning.
News flow is extraordinary. We're going to bring it all to you getting into the Fed meeting tomorrow. You wonder if this comes up with, frankly, with Chairman Powell in the press conference tomorrow as well. John, I really don't know where to start. We've got Julian Emanuel on equity markets going to be great right now, but I think we've got to go to this breaking news and note that Bitcoin is removed from these headlines. It has not moved.
So we're going to break things up, Tom. In about 10 minutes' time, we'll catch up with Sonali Basak down in Washington, D.C., alongside Bloomberg's Anne-Marie to get the latest, because, Lisa, there is still a hearing set to take place at 10 a.m. Eastern Time. I think the tone of that hearing has changed somewhat.
Perhaps just a little bit. His prepared testimony was going to plead ignorance and incompetence and talk about the timeline, his greatest hits of how he dealt with the whole situation. Perhaps the tone has changed now that he is in custody in the Bahamas, going to be extradited to the United States. We will also get later this morning that indictment unsealed from the Southern District of New York federal prosecutors to get more detail of the criminal charges on that side.
I think a lot of people asking, Lisa, what took so long? What took so long? My question this morning is, why now? Why yesterday evening? Why this morning? Why hours before we were set to hear from him on Capitol Hill?
It's a great question. I'm not going to pretend to have an answer. We don't know what the coincident factor is. There was an issue with how he was going to get back to the United States. Was he going to be taken into custody if he came from the Bahamas on his own volition to the United States? I do wonder if that expedited some of the proceedings on the criminal side simply because of the logistics of coming to the U.S. for those hearings.
Possibly. The quote of the morning, Tom, from the SEC chair, Gary Gensler, you picked up on it almost immediately. We allege that Sam Bankman-Fried built a house of cards.
Yeah, the house of cards is there with all the allusions to Hollywood and that, but then I go down and say they make careful note of the validity of tokens. I'm not going to opine on that. I'm not qualified to opine on that. I would lean on who Mr. Gensler's leaning on, which is the Bank of International Settlements in Geneva. And Raphael Hours put together a body of literature over the last 4 years, and part of the heart of that, mining, all this idiot thermodynamic electric stuff, his recent one on retail, but also, John, looking at the token validity.
A house of cards on a foundation of deception. More coverage still to come. Let's get straight into the price action. We're 90 minutes away from inflation data in America. Going into all of that, equities have been rallying. They were rallying yesterday. Biggest one-day pop we've seen on the month so far. A lift again today, up by 0.5% this morning on the S&P. Futures elevated again this morning. Yields just a little bit lower by a couple of basis points. Tom, 358.54. And euro-dollar, I have to say, euro-dollar not doing much. 105.34.
Yeah, I mean, the data's there, and it's moving, and that, and oil's it got its own story. I thought Amrita said that's great. I really don't know where to look on the data this morning, John, off of CPI, other than equities gave us a little bit of a tick of that at about 2 p.m.
John, the cheat guide for equities. I was going through the numbers yesterday. September 21. We opened up at 37.89. That was Fed meeting day. November 2nd, Fed decision day. We opened that day at 38.52. We closed yesterday at 39.90. Lisa Bramage, this equity market has hardly done a thing since September. Just a lot of chop in between.
Perhaps the index level. Underneath the index level, there's been a re-rating of very specific sectors and companies, and that has been a massive shift. We'll get a better sense of which areas of the economy are continuing to chug along here with the 8:30 a.m. print. The CPI, the headline number is expected to come down to 7.3% from 7.7%. JP Morgan saying a softer than expected read, extreme softer than expected read of 6.9% could trigger a 10% rally in equities. Again, which side is that going to be driven by? Is that big tech that's going to suddenly get a boost from this idea of massive disinflation or something of that nature? We're going to be looking at services sector inflation very carefully. Today, we're also going to be perhaps reading that indictment that's going to be unsealed by the Southern District of New York, federal prosecutors coming out. Sam Bankman-Fried currently in custody in the Bahamas as the U.S. House of Representatives prepares for a hearing that had expected his attendance, his prepared testimony, perhaps creating the contours of his side. Now we deal with the politicians and how they deal with this, and try to discuss perhaps some of the donations that he made to a number of different campaigns. And at 1 p.m., $18 billion of 30-year notes being auctioned off, John. I do think it's interesting considering the failed auction yesterday. Not
Yesterday
failed,
was messy.
But really messy auction.
It was messy. It was a soft one, but I think understandable. And I think you'd agree. Going into CPI this morning, going into the Fed tomorrow. We get lucky this morning. Joining us around the table, yes, Julian Emanuel, the Chief Equity Strategist at Evercore ISI. Julian, good morning.
Good morning.
We haven't had the cathartic moment, according to you, that the low earlier on this year is a low, not the low of this bear market. Why?
Look, if you look at past bear markets, there is always that moment. And even in the sort of strange ones, like the fourth quarter of 2018, when we were in that, 3-month degrossing bear market, you still had a cathartic moment where people just said, get me out. And essentially that kind of selling pressure really creates the buying opportunity. And for us, when you look at 2022, yes, volatility has remained elevated, and we have strangeness going on this week with the VIX climbing as the market has climbed. But you have not had that moment of, there really has been very little emotion in this moment.
Two questions. What's the VIX level you need to see? It's not 40, is it?
It ultimately will be.
Okay, cool. Okay. Everybody wants to know, when you're sitting at that little table that Ed Hyman's got with a black pen, how you link the Emmanuel world into the Ed Hyman world. You do it in your note as Ed alludes back to the 70s, the 40s, and the 30s. How is this inflation and this moment into next year allude back to those troubled times?
So Ed is very clear on this, and we certainly agree wholeheartedly. This is not the 1970s. The metastasizing effect of inflation that we had for an entire decade is not there. Clearly we've had these problems. However, we're on the other side of it. We're seeing these readings start to come in. But the other aspect of it, thinking about the 1930s and the 1940s, and actually 1970 itself, is this decline in money supply, M2 going negative. That's a risk that the Fed might have to step back and reassess just how fast this hikes.
Do you understand that's so C.J. Lawrence? I mean, you're taking Ed back to C.J. Lawrence when we go M2, M3, and this.
Well, look, that Thursday afternoon release of the money supply was...
world stopped.
Absolutely.
Yeah.
What's going to lead the equity indexes lower at this point, given that big tech has already sold off disproportionately?
We think that story has more to be written. If you look at it, value versus growth, the extremes are certainly less extreme after the year that we've had of growth underperformance, but there is still really an embedded passion for, let's say, FANG amongst the part of the public whose equity holdings remain near all-time highs as a percentage of household net worth, and we think that is going to be worked off in certainly the first 6 months or so.
Can we talk about consensus just briefly? You published a little bit later in the year. You waited, you published, and it sounds a lot like what we've heard already, which is next year dip, and then we rip, and we end the year at 41.50. That's the call from Evercore. Julian, how do you feel when everyone's saying the same thing about the year ahead?
Very uncomfortable. Very, no bones about it. And I will say that the most bullish thing about the setup right now is the fact that my competition on the strategy side, the average price target is 4,000. Okay, and I am not a raging bull by having a 41.50.
When was the last time we were forecasting a flat market year end?
I don't remember it. I don't know that there's any precedent for it whatsoever. And that, along with the fact that this recession is the most anticipated recession of our entire lifetimes, really gives you pause for the potential for upside here.
So where could the consensus and you be wrong?
If the recession doesn't come. Okay, we all know it's happening. We all know what the components of it are. But again, think about it. Would we have ever thought that we would have seen 2 negative quarters of GDP like we saw in the beginning of this year, and that not be labeled a recession for the first time since the 1940s? If somehow we skate on through, zero growth, slightly below zero, Ed's forecast is 0% GDP, that implies a mild recession. But if it doesn't happen, there is, upside in our view to 4,600.
Do you remember when you were charged with talking about Bitcoin? Do you remember the good old days?
I do. And basically, from our point of view in thinking about crypto is, and we talked about this constantly, is that...
You interviewing him?
I'm taping it for Ed. Continue.
Is that there's an aspect of the technology, the blockchain, most people would agree that there's validity to the technology, the same way there was validity to the transcontinental railroad system in the 1870s, but yet the entire industry went bankrupt during the decade of the 1870s before further economic development.
Julian, it's a space that attracted a lot of capital and a lot of coverage. You covered it at your own shop, and I just wonder let's use Evercore as an example. How difficult would it be to convince Hyman now that this is something we should cover at the firm?
Well, look,
and isn't that kind of the point right now, that this is going to be kind of hands-off for the doubters for a long, long time still to come?
There's no question about the fact, and then again, if you think about the price action is telling you something. The fact that since this scandal was uncovered, the price of Bitcoin really hasn't moved materially lower after the initial, tribulations. It tells you that there is a fundamental belief in the technology, but yet, as is typical for most markets, once there's that sort of feeling of disgust, you're going to have a year, 2 years, 3 years, maybe more of just sideways price action to where only the true believers remain in the industry. And then likely you have your next bout of progress.
Tom, you were talking about exactly that.
I go with the railroad analogy, but I can't go there. I think this is something else, and I go back to Ken Rogoff in his most courageous book I've ever seen of the generation, The Curse of Cash. This is about non-regulation. It's like Binance, far more international than FTX. I'm speaking as an amateur there, don't quote me. And the idea of this, not that it was a scam, but it was wrapped around unregulated activity from day one. And this morning, John, the regulators, the adults showed up this morning.
Well, the headline,
at about 7 a.m.
and the adults, the SEC, charging Bankman-Fried with defrauding investors. Julian, this was great.
Julian, thank you.
Julian, can we just do this on a monthly basis, maybe even, every 2 weeks? Just come into the studio and hang out for an hour.
Drag Ed Hyman along. I'll sit out. You can,
We'll get Gensler to come.
Have a fun.
Have a broader conversation. Victoria Fernandez is coming up shortly in the next hour. We get CPI, inflation data in America, in 1 hour and 18 minutes.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. U.S. regulators are adding to the problems facing disgraced FTX co-founder Sam Bankman-Fried. The Securities and Exchange Commission accuses Bankman-Fried of carrying out a multi-year scheme to defraud investors. He's also accused of concealing risks and using commingled customer funds. Bankman-Fried was arrested Monday in the Bahamas on separate U.S. criminal charges. Disgraced FTX co-founder Bankman-Fried under fire on 2 fronts today. As we just said, he was arrested in the Bahamas Monday after prosecutors filed charges against him. Moving on, investors are awaiting U.S. inflation data that could shape the outlook for Fed interest rate hikes into next year. The Consumer Price Index out at 8:30 New York time. A subdued CPI number, well, that would justify the Federal Reserve's projected half-point interest rate hike on Wednesday. And Bloomberg's learned that China is delaying a closely watched economic policy meeting this week. That's because of a surge in COVID infections in Beijing. No word when the meeting will be rescheduled. China has warned it faces a big jump in the number of COVID cases after scrapping most testing and isolation of infected patients. In the UK, the government is warning of significant disruption in the National Health Service. Both nurses and ambulance drivers are preparing to go on strike in the run-up to Christmas. Some 600 members of Britain's armed services are being trained to drive ambulances. Public sector workers are demanding pay hikes that keep pace with inflation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. The markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. The U.S. economy, and Bloomberg's got you covered.
My head's spinning here.
First, CPI data comes in this morning.
We're seeing things work themselves out.
This is going to be a really choppy ride.
Then, tomorrow afternoon, a special surveillance will cover the Fed's last rate decision of the year.
Power of that Fed speak is declining.
Does this Federal Reserve have the commitment to keep going?
The question is, how high do they have to go?
The CPI report this morning and the Fed decision tomorrow afternoon. Right here on Bloomberg, your global business authority.
The reason the Fed is so focused on continuing to raise rates, not necessarily at the supersized 75 basis point increase that we saw earlier, but 50 basis points, and as you said, more work to come down the road, is because inflation is still elevated.
That was Lindsay Piegza, the Stifel chief economist. I did not expect the Fed decision tomorrow to be buried in the news flow in quite the way it is this morning, but it is. We are 1 hour and about 12 minutes away, 13 minutes away from inflation data in America. As we go into that, equity futures shaping up as follows, up about 0.5% on the S&P 500. Yields come in a couple of basis points on a 10-year, 358. Lisa mentioned it a few times this morning. Messy auction yesterday on the 10-year ahead of CPI this morning and the Federal Reserve tomorrow. Euro dollar not doing much, 105.39 and crude at 73.36. The main event this morning, less than 24 hours before, he was expected to testify before the House Financial Services Committee. Disgraced FTX founder Sam Bankman-Fried arrested in the Bahamas. Awaiting details of the charges from the federal indictment in New York, but just over an hour ago, the SEC announced its charges against Bankman-Fried, writing in a statement, FTX operated behind a veneer of legitimacy. Mr. Bankman-Fried created by, among other things, touting its best-in-class controls, including a proprietary risk engine and FTX's adherence to specific investor protection principles and detailed terms of service. But as we allege in our complaint, Tom, that veneer wasn't just thin, TK, it was fraudulent.
And it goes on. That's just the meat of it. That's a perfect quote to quote, John. But this is line by line their, I guess, ground they will stand on as they move forward. And Lisa, you're better maybe than this. And that how do they link into the court system that's also looking at these kind of events separately? How do the two dovetail? It's a mystery to me.
It's clear that the investigations were related and depended somewhat on each other. They do go through different court systems. We're not only going to get the SDNY, Southern District of New York, coming out with their indictment today, unveiling that. That's the expectation. But also the CFTC, Tom, is expected to also go after him. Again, the tentacles of this are really some of the biggest questions that people are looking for.
We're scrupulous about it when we're wrong. John, surveillance correction. I mentioned earlier a sponsor of the World Cup, which we've been shockingly devoid of today. And I said weeks ago they had 8% you could make doing whatever these things do. That's not there anymore. And what's there is you can get up to 5% back on the crypto.com Visa card.
Oh, is that what it says?
They get up to 3% rewards on your Bitcoin and many others.
Still out there, isn't it?
They're amending it as they can. We need to get an update on this in the last hour. Shonali Basak in Washington with Anne-Marie Horton. Shonali, what have you learned in the last 60 minutes? What is the distinction in your study of these documents?
I think importantly, we had the FTX CEO who's testifying today in front of the House saying that FTX had commingled funds. And in that SEC complaint, you also see them really talking about the commingled FTX customer funds used for undisclosed venture investments, lavish real estate purchases, and large political donations. We'll talk more about those political donations, but I've got to also mention this venture investment portion of this. Remember, we talk a lot about how venture investors had ignored the red flags as they invested into FTX. The SEC now saying that those investors were misled. But remember, people who took the money from Sam Bankman-Fried as well as FTX Ventures. Also, we have heard later many anecdotes of folks that have said that they thought they were taking money from FTX and they got a term sheet that said that Alameda was investing at the end of the day. So there were red flags little by little over time, and now it's a big question of how people invest, but also who people take money from as they look to grow their business.
Emery Horton, the senator from New York, Gillibrand, I guess got money from Mr. Bankman-Fried, and she's going to give it back. Is that what we're going to hear today? Are we just going to have a lineup of people? Granted, maybe they're as dumb as I was and they didn't see this coming, and they're all going to say they're going to give the money back or they're going to donate it to John Farrell, one of the two.
Tom, it's already been happening. You've seen a number of lawmakers that have taken money from Sam Bankman-Fried since really the collapse of this in early November, donating that money back to a number of charitable organizations, whether it be $2,000, $12,000. They want to make sure that they are saying that their hands are clean. They didn't realize that this was allegedly or potentially fraudulent scheme going on, and that they want to give that money back. Now, Sonali and I, welcome to DC. Sonali, have been talking about actually the other side of this as well. His deputy, the number 2, Nick Salem, while we talk about Sam Bankman-Fried and the millions he's given to Democrats, his number 2 was giving a ton of money, almost as much as him, but to the other side, to Republicans. So also you're going to have Republicans come out that took from his number 2, who's not getting really all the headline names right now, also probably be giving that money back. But altogether in the 2022 election cycle, these 2 individuals gave more than $60 million.
But Anne-Marie, there's a larger question beyond just the political donations about whether the touch has been perhaps overly light when it comes to this space, overly friendly, whether it's political donations or whether it's to not stifle innovation in the face of a lot of money sloshing around the system. How much criticism are Congress members coming under for a lack of a harsh approach to some of these players?
Well, they probably will come under a lot more when we get more of this news out, and especially looking through this SEC statement, which obviously calls what he was doing a, quote, house of cards. There's going to be a lot of these grenades thrown at politicians about why they didn't step up in place. Although we should note, there has been talk on the Hill throughout the summer, in September, about a cryptocurrency regulation legislation. The issue that this legislation has is that many believe that potentially it would have been at least a little bit more welcoming to the crypto industry than some of the hardliners in the crypto industry would like to see. It would have given the CFTC a lot more oversight, and some say actually this should come under the purview of the SEC. But what was going to happen now is legislation is going to have to move, I imagine, because there's going to be a ton of questions, and people are going to say that lawmakers need to get a handle on it.
Sonali, just quickly here, in the broader venture capital and the broader investment space, it's surprising to me that crypto assets, cryptocurrencies are not selling off in response to this news. I'm even looking at a number of brokerages, crypto brokerages, their shares are all up if you look at the pre-market moves. Is there a feeling that the contagion has already happened, or is there still another shoe to drop?
I think Tom Keene is absolutely right here. You have to keep an eye on Binance here, a company here that has seen $3.7 billion of outflows here, net outflows in the past week. Keep an eye on it, but to the point here, the reason people flock to Bitcoin so much is that idea of decentralization. But remember, not your keys, not your coins. So the on-ramps to this industry are going to increasingly matter here. Remember, aside from what's happening with these criminal charges that Sam Bankman-Fried is facing, there are a host of bankruptcies. Like, let's be honest here, in the background, you have hordes of companies that have hired Wall Street bankers and white shoe law firms to run around Wall Street to raise money as they look to get past through this crypto winter.
Sonali, thank you. I think that's what it is, right?
She's writing the screenplay.
Arctic.
She's writing the screenplay.
You reckon? Sonali Vasek, Anne-Marie, down in DC. So there is a hearing still to take place today, right, at 10 a.m.? The House Financial Services
I think
Committee.
you've been ahead of me on this, John. You've nailed this thing, the tension that we
What's interesting is that we'll still hear from the new CEO, at least we expect to. And based on our reporting in the last 24 hours, last week, prosecutors, the FBI, Department of Justice officials, and FTX's new CEO and restructuring expert, Ray, met at SDNY's headquarters in downtown Manhattan. So I think it would be maybe a little premature to throw freezing cold water over this hearing. I think this hearing at 10 a.m. Could still be interesting, Lisa.
And the current CEO has not been talking to Sam Bankman-Fried, and Sam Bankman-Fried complained about that, said, I've been trying to, looking at, hey, I can provide you with some information, and he complained about that in the statement that he prepared for Congress. Whether we get perhaps something substantive, what's going to be the nature of it? Is it going to be a broader web, or is it going to be a full disclosure, a full mea culpa of the current CEO of what happened?
Do you want tweet of the morning?
Please.
Just to change the subject. So United have announced an order of up to 200 new Boeing airplanes, 787 Dreamliners. I know you've seen this, Tom. Connor Sen of Bloomberg Opinion, quote, weird. They violated the business rule that you can't make massive wide-body plane orders when the ISM is below 50 and the yield curve is inverted. Isn't that great?
Lufthansa with positives as well.
Connor sent out on Twitter this morning. Live from New York, this is Bloomberg.
Humanity consumes 500 billion cups of coffee every year. That's almost double what we consumed a decade ago. And yet, coffee production is one of the most antiquated industries in all of agriculture. Climate pressures like drought, heat, and blight are affecting food producers in different ways all over the world, as climate change becomes something we can taste. In the past year, hundreds of thousands of acres of coffee plantations were wiped out. What's at stake are the livelihoods of around 125 million people. Because, if you're being honest, this is a plant that cannot hold on much longer in a changing climate.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
The latest inflation data in America due 60 minutes from now. Before we get there, here's a taste, a flavour of the equity market for you. Biggest one-day pop on the S&P 500 yesterday. Off the month so far, a lift to this equity market again this morning, up 0.5% on the S&P, both on that and on the Nasdaq 100 as well. Looking at the bond market, 2s, 10s and 30s, deep curve inversion over the last few months. A bit more depth to that, Tom. We're down 3 basis points on a 10-year, 357.99 on a 2-year, unchanged at 437.
I'm glad you bring this up, John, because I've missed it. What is the distinction of the bond market dynamics and shifts right now into inflation, into the Fed? I can't see it.
I keep hearing that bonds are back. Tom, that bonds are back
Price
going
up,
into
yield down.
2023. Yep, I keep hearing the same thing. I'm asking the question, though, how much of the risk reward has shifted over the last month, though? We've had, what have we had, an 80 basis point move on a 10-year off the highs of the year of about 430, back down to about 350. On a 2-year, a couple of Fridays ago, several Fridays ago now, it was about a month or so ago, we had a 2-year get really close to 480. And at least we're back down to about 437.
And a lot of people are saying that perhaps people have gotten a little bit overexcited about the Fed pause kind of storyline. I do think today is going to be really important. In 60 Minutes Times, we're perhaps going to be talking less about Sam Bankman-Fried and a little bit more about inflation in America.
The conversation is going to shift markedly, and then it's on to tomorrow. So tomorrow, most people anticipating a 50 basis point hike from this Federal Reserve. Then after that, Lisa, really it's going to come down to the projections that you get. They call it the SCP, the Summary of Economic Projections, the dot plot, and all the forecasts for next year. I keep hearing 525. I went through all the bank's research, 5 to 525. I think that was Goldman, it was Citi, Bank of America. Now, if everyone's expecting the dot plot to shift up to 5 to 525, question I've been asking over the last week or so, where's the scope for the hawkish surprise? Is it the communication in the news conference? Because if it's the dot plot, I'm asking a question, while you're all expecting this shift to a 5 handle, how do they surprise?
Especially since a lot of people are projecting it probably will only go up to a 4.9% statistic.
Can I frame the outlier here quickly?
Please
Dominic Kostum, super restrictive is the language he uses, and Ben Emmons published a brilliant note this morning using the phrase ultra-restrictive. That's the risk they have going into this.
Is 5% super restrictive? And that's the conversation we'll
suggesting
have.
it is because of this unique economy. It's a minority view, let's be clear on that.
And clearly, if CPI fades quickly, Lisa, it's going to look restrictive quite quickly.
Well, in 60 Minutes time, we will be talking all about that. Right now, we're still focused on the Sam Bankman-Fried storyline. And what I've been struck by is the lack of action that you have seen in crypto-related assets and crypto-related companies. If you take a look at some of the companies that are most hinging typically on the crypto sphere, they are all positive in pre-market trading. You have MicroStrategy up 2%, Marathon Digital up nearly 2% as well, and Coinbase up nearly 1%. The losses year to date have been dramatic for these companies, ranging from 60 to 80% declines. So we've already gotten that baked in, but it raises this question of, have we seen the worst of it? Have we basically already seen the contagion? John, it's hard for me to wrap my head around that, given how much money went into the space, and given the fact that some of the bigger players are getting perhaps unleashed basically shown to be perhaps acting in somewhat of a fraudulent manner.
I mentioned it a little bit earlier this morning. I think it's worth mentioning again. So many people are saying the same thing anyway. This is an area that attracted so much capital investment over the last several years or so. There will be some real career risk attached to making those decisions. Now, and I won't name names or firms, but I think you've seen at certain firms that put money into these kind of ventures, those individuals have now left. To make people make those same decisions again, they're going to have this extra layer of conviction that maybe is absent right now.
And what happened to all the retail traders? Everybody who was talking about getting in and making a quick buck. And what about the institutions that lost hundreds of millions, if not billions of dollars? To your point, how much does that really withdraw some of the capital from even the peripheries, all of the infrastructure that's built around
I think there's a difference in one part. I don't think this is like the late 90s where people got burnt by stocks and didn't come back to stocks for a long, long time. Something unique about this asset class where the people who believe in it really believe in it. And I don't know if that's changed at all, Bramo, over the last several months.
Which is the reason why I've been looking at the trading activity, and the fact that you're not seeing a wholesale abandonment of the industry speaks to your point that perhaps it doesn't change. If anything, if you hear the line from crypto enthusiasts, it's thank you. Let's weed out the bad actors and let's get on with it.
So just to put a bow on it, so we've heard from the SEC. They're charging Bankman-Fried with defrauding investors. You've mentioned the Southern District of New York a few times this morning. What are we waiting for from them this morning?
To unveil the indictment. And to Tom's point earlier, when we were talking, what's the difference between the SEC and SDNY and the Southern District of New York? SEC is only civil. SDNY is criminal. So that is guilty or not guilty versus who is Sam Bankman-Fried ultimately liable to and for how much.
Yeah. We're going to continue this discussion. It's not going to go away this morning here. What, John, 55 minutes away from a hugely acclaimed inflation report. We'll, of course, give you full coverage on that. But right now, we look at the litmus paper of the system, and it's not Bitcoin, it's the dollar. Mark McCormick joins us, Global Head of FX Strategy at TD Securities. Mark, you nailed strong and resilient dollar. We had HSBC on Daryl Meyer the other day, and he said the same thing. Have you gone to a weak dollar strategy or a lesser resilient dollar?
Yeah, I think in terms of tactically trading, the convictions are a little bit lower on stronger dollar. I think if you think about it this way, we have to think about how do we trade ideas and basically how we forecast them. So our premise is that we're still very bearish on the dollar on a forecasting profile. If we look into the second half of 2023 or even where we are at this point next year, we're bearish the dollar. I think going into 2023, though, we are actually bullish the dollar. We have a generally pretty high conviction on it. As you mentioned, it revolves around inflation, it revolves around Fed, it revolves around China reopening, and the global economy in general. And I think what we've seen the last, say, 6 weeks or so is the global tail risks have been reduced, but we have not seen an acceleration in the global economy and the reduction in the risk premiums. And, basically a very well-populated long dollar position has all just been squeezed out. But the fundamentals are still very supportive for the dollar, at least as we move into Q1 2023.
Is your study a rate analysis, a real rate analysis, and nominal, no? Or is it a flow analysis in the next year?
I'd say it's a factor analysis. That's quite critical because it relates to all the things that we've talked about and focused on this year and whether or not those things reverse or whether or not we have momentum. And to me, the key overarching theme for FX remains commodities and remains in terms of trade shock. And what our models are kind of telling us right now is that in terms of trade shock has reversed for Europe. It's reversed for Japan. Those things allow to reduce the pressure of break-evens and lower real rates that we saw that was such a dominant driver of the dollar. So it is at the core of it, it's a real rates, but it's driven by external factors that central banks have no control over. And the Fed had just more room to raise nominal rates relative to where inflation expectations were going, being priced in the market. But to me, we have to think about inflation momentum. We have to think about terms of trade. And what we're seeing in FX markets, they are pivoting to value. Valuation models have been awful for at least the last year, and momentum models have done well, which is the first time we've seen FX momentum actually make a ton of money in terms of performance. So I think the critical angle here is we're seeing the pivot on the global economy, and that is a value trade for FX, which is very bearish for the dollar if we can muddle through the global scenarios next year.
Mark, I have to ask you this because we've been talking all morning about Sam Bankman-Fried, and once upon a time, people were talking about Bitcoin as a comparable currency to the dollar and a store of value that would rival all of the major currencies. Based on what we have been seeing, have you moved away from that kind of idea? Do any of your co-strategists still talk about Bitcoin in tandem with some of the G10 currencies?
I think, as you mentioned, it's a bit of a hope. And there's a view, and I think, as you mentioned, it's related to stocks and some of the other bubbles we've seen. But I think this is a real disruption. If you kind of read the underpinnings of what a lot of people in crypto like to link back to, it's a book that came out in the 90s. It's a sovereign individual. And it's a concept of disruption. It's a concept of, the digital economy and a pivot away from the industrial age to the information age. And that just requires a new set of technologies, a new set of tools, and new currencies. So I do kind of think that at the end of this, this is kind of the first try with a new currency and a new structure. And obviously, you've had a lot of bad apples and you've had some failings behind it. But I do think the concept of disruption, especially in the currency space, in the world that we have, which is going to be very digital, is something that I think is still something that'll be very important and will be a core alternative. Obviously not to the dollar itself, but the technology and disruption, the process is going to be probably very important as we move through the next 5 to 10 years.
How much do you pay attention to that when you look at the dynamics in the broader FX markets that are very liquid and more traditional?
Well, the way we look at it, what's interesting is that early on, we tried to run Bitcoin and cryptocurrencies through our macro models and the factors and things we just talked about, some of the fundamental stuff that works quite well for some of the fiat currencies. They did not explain any of Bitcoin or Ethereum or any cryptocurrencies. But in the last year and a half, your single factor that explains equities, that explains rates, that explains currencies of the dollar, that factor started to explain half of Bitcoin. So it was very clear that the cost of money was a critical driver in the crypto trade. And so I think part of it is, again, we need real rates to settle. We need the volatility on rate moves itself. You look at the MOVE index, we've seen that peak as well. That's been inviting more people back to emerging markets. But it's very clear right now that, what crypto was is in an age of easy money and a very low cost for disruption, the idea behind it worked very well. And now the cost of money going up has forced people to kind of rethink about where there's actual profit, where there's value. And that's why technology itself has been disrupted in the disruption phase.
Mark, thank you, sir. As always, Mark McCormick there of TD. I had a CPI a little bit later this morning. The end of easy money, TK, is ended this year, that's for sure.
It's the heart of the matter, and I sound like a broken record on this, but it is the theme for next year. The easy money's gone. Julian Emanuel mentioned it. Maybe it was off camera when he did. The risk-free rate's back. A sharp analysis has validity. Maybe profit is back in vogue now. Some say active management's back in vogue because of this. I'm not there.
Why aren't you there on that? Do you think that's just a sales pitch?
One of my moments, folks across, how long have I been here? 6, 7 years, whatever it is. There was a moment in an event where I had the honor of John Bogle of Vanguard and Cliff Asness together, and it was magical to talk about this passive-active debate.
That's a
and Cliff was so respectful to Mr. Bogle, so respectful about what John Bogle invented. And here we are. I saw, at least in your world, I saw somewhere in the zeitgeist, ETF bond investments now ginormous compared to anything else. Ginormous is CFA level 4.
I'm told, yeah.
Thank you. Yes, thank you.
Yeah, that was the example of how to dodge a question.
Thank you.
Very eloquent, though.
I did. Because Bramo's here, we're not doing World Cup talk. Is that what it's about?
I can talk about it later. I mean, I'm unhappy tomorrow. I'm still unhappy that Chairman Powell is going up against the World Cup semi-final. But I'm just thinking of talking to management and maybe
Where, in
sort
DC?
of no here and perhaps skipping a Fed.
Good luck with that.
Christina Campmany of Invesco coming up next.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Disgraced FTX co-founder Sam Bankman-Fried is under fire on 2 fronts today. Bankman-Fried was arrested in the Bahamas Monday after U.S. prosecutors filed criminal charges against him. Meanwhile, the Securities and Exchange Commission has filed a civil action lawsuit accusing Bankman-Fried of carrying out a multi-year scheme to defraud investors of $1.8 billion. Members of the European Union will try again to reach a deal on a controversial plan to cap high natural gas prices. The EU Energy Commissioner says the talks may be the most difficult yet.
We will at least aim for broad agreement on technical parameters. And as we all know, there are still very different views around the table. So this, at first, we need to see if ministers do have the willingness for compromises.
Germany, the Netherlands, and Denmark are among those calling for a cautious approach. Belgium, Italy, Greece, and Poland are pushing for a more aggressive method to contain gas prices. Hong Kong is scrapping some of its last remaining COVID restrictions. That follows China's rapid shift away from its zero-tolerance approach. The government will lift a ban on international arrivals, going to bars or restaurants. It will also stop requiring people to scan a QR code on their phones to enter venues. COVID curbs have hobbled Hong Kong's economy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
A lot of these areas still have very, very good valuations.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Getting down to 2%, I think, is pretty difficult. I don't think you get there quickly, and I think the Fed will have to look at the data and sacrifice to some degree the inflationary side of it. Going, maybe they get to 3 or 4%, but I don't think they want to, sink the country into a more severe recession.
Deborah Cunningham there of Federated. He's live from New York City. Tom just confirming what my Christmas present is.
Yeah.
Would you say BitDog?
BitDog, it's a primer.
Okay.
BitDog,
it's a book.
It's a book.
BitDog.
Yeah, it's 800
Nice.
pages. You'll love it.
How
It's
exciting.
almost as thick as Crescenzi's book on the 2-year.
I can't wait for this gift. You're gonna bother wrapping it up or just throw it across the desk?
Well, because you got the tree you've got, I figure the glow of the tree will shine down.
The squirrel will deliver it.
He is so unhappy about my tree.
I know.
FaceTimed me, started critiquing it. What was un-American about it?
Come on, you got the kind of tree where you wrap it, you put it in the closet, you go up, you leverage it, it comes down.
You still have to put it together.
I'm sitting there at home with ugly lights from the Christmas store, changing the bulbs where they've burnt out.
You're upset by its perfection. You're offended by it.
Yeah,
by the symmetry.
It's a modern statement, and I love that you do
It's a
that.
modern statement.
My tree, there's a squirrel. I'll send you a photo. There's a damn squirrel in my tree, and Vet Bill peed on it last night.
I've seen that picture.
Yeah, well.
Yeah, you want to compare yours to... anyway.
John.
Futures are up 0.6% on the S&P.
If you go above 107th Street, over on the west side of Central Park, that's where the good trees are.
That's where you bought yours?
No,
it's not.
No, we went out, we cut it back, and they had the dogs on leashes, and we dragged it back.
Okay, CPI 8:30 Eastern time. I don't think we've gone through the estimates once. So
Thank God for that. Let's do that.
So headline year over year, which is probably what ends up in the front page of your newspaper, expected to come down from 7.7% to 7.3%. On Wall Street, there'll be a tremendous focus on month-over-month core inflation, just to try and pick up a trend month-over-month over the last several months. We're looking for that to come at a 0.3%, in line with what we'd seen in the previous month of 0.3%. And Tom, just breaking down the estimates yesterday, I have to say pretty much every bank is tightly packed around 0.3%.
I agree.
Without much difference.
I agree, and all my radar's up on that as well. I've never seen it where the monthly statistic matters so much, in the calculus of
huge importance. Yeah.
We've got an expert on that right now. We have been really not giving you the proper report on inflation today with all the distractions of the legal world. We'll continue to follow that. Shonali Bassick and Anne-Marie Horton in Washington. But right now, to delve into the impact on the market that we'll see at 8:31, Christina Kentmany joins us, Global Debt Senior Portfolio Manager at Invesco. Simply put, what will Invesco watch in this inflation report at 8:30?
I think the market's looking for the details, and will we have a follow-on to the October relief, which was broad-based. You had energy come off, you had OER, you had goods come off, and the Fed is clearly waiting for some slowdown in inflation, and we need the other side too. We need the labor market to come. But the market has turned so quickly, and the narrative of what's actually pricing in inflation markets is so different.
This is critical right now because everybody's focused on the equity market, stock market recovery, doom and gloom out there, 100% equity. What part of the bond market has had the responsiveness, the elasticity of a quieter inflation level? What part has moved?
I mean, you've seen you've seen break-evens move and you've seen nominals move, but break-evens have moved from 260 kind of across the board in 10s and in 2-year breaks, all the way to 225.
She's just loaded with jargon. I mean, she's just like, what's a break even and a nominal?
So nominal rates are just treasury rates, and real yields, and the difference between the two is our break evens. But it's a measure of what inflation we're actually pricing in the market. And again, the narrative, the common theme from our economists across the street, but consensus economists across the street, is maybe we get to 3.5%, 4% by the end of next year. But we're actually pricing 2.5% by June. I mean, it's a very different dynamic than
what makes sense to you in terms of what the market is saying versus economists. When we talk about the reaction to the CPI print, people think that a softer than expected read would lead to lower bond yields and would lead to higher equity valuations. Do you agree, or do you see a potential sell-off in longer-term debt, particularly if people view this as a green flag for the Federal Reserve to pause?
So look, I think it's really interesting, and I think you can survey 15 experts, whether they're traders, street economists, portfolio managers, and you ask them the exact same question of what do we get today for CPI and what's the market response? And with a 0.3 number, I've heard we have a 5 basis point rally, and I've heard we have a 30 basis point sell-off. And I think it tells you that there's liquidity issues in the market, and people aren't really sure what to do with the actual data and what it means for the Fed. We still have a Fed that's going 50 basis points tomorrow. We've rallied almost 100 basis points off the highs. I mean, these are tremendous moves.
People have been talking about the lag effects too. Some have speculated we only have seen about a third of the overall tightening impact. And so how do you game that out given the calls for a pause and then what that read-through really is in terms of a dampening effect on inflation?
And I think that's why the Fed has tried to move towards this downshift and why we're talking about 50 tomorrow. And there's this chatter in the market. We've gone from this consistency all year of pricing in more and more and more. A year ago, in November of 2021, we were talking about maybe seeing 50 basis points of hikes in 23.
For the whole year.
For the whole year.
For 22,
we're going to have 50 tomorrow. And this is like our slowdown.
What's great about this is you're Villanova Finance. Great. And you're totally a bond nerd. I get that. I want you to talk now like a salesperson at Invesco. How many years does it take to recover from the negative 18%, negative 20% of debt that we've seen in 2022? I get the duration and all the stuff you and Lisa are encyclopedic on. How long is it going to take for me to get my principal back to what it was in 2019?
Look, I think we're transitioning away from a world of mass global central bank support. And we don't have that anymore. So it's going to take time to recover. And it doesn't happen in 1 year. But we do think that fixed income looks more interesting into 23. But I think the pockets, even in the last 2 months, have shifted as you've had this 100 basis point rally. Again, I look at nominal treasuries. 10s were at 425. We're sitting at just sub 360. It's a lot less compelling. Real yields offer some value. FX is probably more interesting, but...
Are we heading toward a higher inflation regime for a longer period of time?
Look, I think when we look back at the year, economists across the board, the Fed included, we've had a horrible track record of predicting inflation. So it's interesting that today the numbers have come so close, and we've made this very quick shift to saying we're going to have this rapid deceleration, and the market's pricing that, and we can get to 2.5 by June when we've consistently overprinted. I think the risk is on that side, right? This cycle has been unlike any other. Inflation has ramped up so quickly. Things have moved so quickly. Can it turn around the other way? Yeah, I think it can. But the risks are still two-sided. And the market, I think, is focused on this. And you had this John Roberts piece last week that got a lot of market attention talking about if inflation really does come down quickly, maybe the Fed policy rate in June is supposed to be at 1%. It's a very different world than where we're in now, right?
But it's not just CPI, it's payrolls too. I think we surprised to the upside for 8 consecutive months, and the bias is pretty clear. To your point, Christina, this market is not focused on the next 100 basis points of hikes. This market, and the bias is clear, Tom, this market's focused on the cuts that they think are in our future, maybe 12 months away.
I have never seen it like this. I thought Gina
the
Smolik
game
in the
right
New
now.
York Times had it dead on yesterday.
It's Gina Smolik.
How wrong were we in the last 12 months? How wrong are we right now? Nobody knows.
Love Gina Smolik. Just for the record.
Everyone knows you love
Christina says I
she
did
is
okay,
great.
even if you don't think so.
I think Christina's fantastic. Why did I
Can
get
I
such
shoot-
a hard time asking for
I'm
definitions?
fired up.
You used to do this with me.
I got
I'd say
hate mail.
junk debt. And he'd go, definition of junk debt. Go.
Everyone's esoteric.
I'd be like,
Come
the
on.
S&P,
I got
triple B
hate
minus
mail
below.
out on Twitter. It's off the chart. Can we talk about an adult?
Wikipedia. What?
A public servant for 25 years. He's at Duke University. It's a school somewhere adjacent to the University of North Carolina. John Reed Stark. He won the award at the SEC for being Mr. Perfect and all that. Encyclopedic on enforcement. Here he is 2 days ago, not out with Bankman-Fried, but out to Binance. Binance's proof of reserve, that's like a whiskey thing, John, report doesn't address effectiveness of internal financial controls, doesn't express an opinion or assurance conclusion, and doesn't vouch for the numbers. I worked at SEC 18 plus years. This is how I define red flag. That's the most adult thing I've seen in the last hour.
I think it's fair to say the SEC is looking at a lot of red flags right now, Tom.
Yes.
And I'm not talking about that particular firm. I'm talking about Bankman-Fried.
I agree. Yes.
And FTX.
Yeah.
They've got a lot to focus on. We have too. We are 34 minutes away from inflation data in America. Then after that, the focus shifts quickly to a Federal Reserve decision tomorrow. And Argentina. Playing a little bit later.
Yes.
Victoria Fernandez is going to join us very shortly from New York.
Argentina's favored, right?
Well, what's that worth, this World Cup? I've got no idea. Christina, this was great. Thank you. From New York, this is Bloomberg.
And you're one of the most fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
The secret success of any company is to grow. And I think that we, WPP, and our industry more broadly, can be really at the heart of a client's growth. You know, how do they succeed with consumers? How do they reach them in new areas? How do they innovate? How do they create new brands?
The Fed is very much on a glide path that is higher for longer.
From the Fed's perspective, it's not about whether or not we see negative activity. It's about whether or not we can get inflation on a meaningful downward trajectory.
The article rate is about the labor market, the inflation numbers, and wages.
Certainly, at the latest, one more increase at their May meeting.
There's the choppiness about to come, though, into the CPI, into FOMC, and into kind of the beginnings of January, where everybody thinks they know what the trend is.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. An interesting day for economics. Inflation here in 29 minutes. We'll have a complete report. Michael McKee's in Washington, right, John?
He is, so I'm told, yeah.
He's there, and we will cover that as well. But we must speak of this historic day for securities law in America. John, were we prepared? I was not prepared for the specificity, the violence of the statement by the SEC on Bankman-Fried.
Well, first of all, I think what we were prepared for today was testimony from Sam Bankman-Fried in front of the House Financial Services Committee, and that got ripped up yesterday after we found out he'd been arrested in the Bahamas. This morning, the latest news is that the SEC is charging Samuel Bankman-Fried with defrauding investors. We heard from Gary Gensler, Tom. He called it a house of cards on a foundation of deception. Bruising statement from the SEC. And Lisa's talked about it all morning. Right. It's not just the SEC this morning. We're also waiting for more detail from the Southern District of New York.
Let's talk about this detail I want to get out front of this story and frankly get out front of this important inflation report. Lisa, the distinction here is civil and criminal as a general amateur statement, but what will be unveiled further this morning?
We'll have to see, right? We'll parse through some of the details.
It's that much of a mystery.
We don't understand what extra details there are. I will say just some of the details within the SEC complaint indicate some real deliberation, just a sort of intention to necessarily create a scenario where Alameda, the privately held crypto hedge fund, as they described it, had an unlimited line of credit backed by FTX. And that is really what they highlight.
John, the invention of FSA in England is so different than here. If this was in England, if this was in the city, if this was in London, would it be the same process there as here?
I'm not in a position to answer that. I think the query that I think we've faced a lot of over the last month is why did it take so long to do something like this?
That's clearly in the zeitgeist, yeah.
I think to be fair, it takes a while to put together a case to make these kind of allegations and put charges together. The allegation, I think, is different this time because when we went through the Madoff episode all those years ago, Tom, Madoff came out and admitted to it. That was the big difference. We've just had, a 1-month media tour from Sam Bankman-Fried. And Lisa, you and I talked about it. I think we got some insight into the line of defense from Sam Bankman-Fried ahead of the charges itself. He's basically claiming, I'm naive, I didn't know what I was doing, yes, I messed up, but none of it was deliberate.
And this complaint directly repudiates that by saying that he personally signed off on removing some restrictions to the line of credit to Alameda, the connection, the interconnectedness that let FTX funds head toward this other unregulated, out of the U.S. entity.
We're going to move on from this, but we'll stay with it all morning, of course. Sonali Basak and Amory Horton in Washington, but I'm just going to say I don't do a parallel with Madoff. I think it's
No.
different.
And I'm not suggesting you should do either,
Yeah.
Tom. I'm just suggesting that a lot of people said, well, why did this happen back then and it didn't happen this time around? And I think the differences are obvious.
Yeah, and I think that's important as well. We need to get to the data as we get to inflation here. And the data it's not what you're going to see in the headlines this morning. John, the data is not year over year. It's month over month. And that folds right into the data check this morning.
And it's month over month core. You've got to strip out food and energy. And I tell you, the likes of Michael McKee will go so much further than that. So we can talk about the nuance when the data comes out. Going into it, equities up yesterday, biggest one-day pop of December so far. Equities up again today by 0.6%. Do you remember the gains on November 10th? Do you remember the scale of the move that we saw on the S&P 500? It was a monster move on both the S&P and on the Nasdaq as well, off the back of a downside surprise on CPI that day, Tom. And I think we've somehow forgotten some of this. We were up by more than 5% on November 10th off the back of CPI, which I think just gives you an idea, not directionally, but just how much this market can move on this data point at the moment, Tom. Earlier on, you were talking to Julian Emmanuel, and you said we used to look at money supply, used to wait for the M2 data on a Thursday. Then it was all about payrolls. Now it's all about CPI, nothing else. The question people are asking is whether the attention does shift now from inflation to growth. I think it's interesting to hear from HSBC this morning on the growth story. Everyone's expecting it to weaken in the first half. HSBC, moments ago, Max Kettner published, we increasingly believe the widespread belief of a weak first half is misplaced. Activity data is still surprising to the upside. Max goes on to say both top-down, bottom-up expectations have been downgraded so much in recent months, at least that it makes further positive activity surprises likely.
And that is the biggest pain trade. And Julian Emmanuel saying that that is his scenario that could potentially upend his and many of the other consensus calls in a way, especially if that leads to a much more severe downturn later on.
But again, folks, we look at the guests and what they say, and John, help me here, but when we met with Mr. Kettner in London, I believe it was, for the Queen's funeral, Mr. Kettner was shockingly cautious.
Yeah, here's the punchline, though. Here's the punchline. He's still underweight equities because he thinks a stronger first half is actually going to generate all kinds of concerns that we had through much of this summer, and the playbook really is August, September, all over again.
And calls for a more hawkish Fed, too.
We're going to stay on track here. We're going to do it this morning with you. John, did we do the data check? My head's spinning
we did.
so
I think
much
you were
with the
distracted,
flow.
but yes,
Futures
I went through
up
numbers.
24, up 0.6%. Futures
Numbers
advanced.
were talked about.
Why is the VIX at a 25 onto 26 with the equity markets we're seeing?
Did you hear what Julian said earlier?
Yeah.
He said that cathartic moment that
40-ish?
makes a low the low is 40.
Yeah,
He's
I
looking
was
for that
a bit
spike
surprised.
out to 40.
Also surprised this weekend by the evidence that someone from Houston had migrated up through College Station to Dallas. Victoria Fernandez with a sighting at Cowboy Stadium, which they haven't won in 26 years. That's a shock. The last time we saw maybe the cacophony of outlooks in the equity market was, well, maybe 26 years ago as well. She's chief market strategist for Crossmark Global of Texas and beyond. Victoria, I have never seen the jumble of outlooks. You guys are in the trenches on this. What do you say to scared people moving into next year?
Well, Tom, I think when we talk to our clients, we've been doing these symposiums around the country, and it's their number one concern. What do we do for next year? And we tell them, look, you have to take a balanced approach right now. We know that when you look at the economy, we've got some positive elements going. The consumer is still strong. The labor market is still strong. You've got buybacks coming in. You've got seasonality. You have some things that are good foundations for the economy. And on the flip side, it's all the stuff you've been talking about this morning. We know we're going to have slowing growth. There's concerns about earnings estimates. We've seen EPS growth estimates come down by about 5.5% so far this quarter. That's double what you typically see. There are concerns, obviously, of a shallow recession. So you have to be tactical and have a balanced portfolio in order to take advantage of what's going on in the market at any particular time. We don't want to be too heavily weighted one way or the other.
Bonds are back. How many times have you heard that? Philip Hildebrand of BlackRock saying the following: central banks are unlikely to come to the rescue with rapid rate cuts and recessions they engineer to bring down inflation to policy targets. We are underway nominal long-term government bonds in each scenario in a new regime. Victoria, can you speak to that call from BlackRock?
Yeah, so look, I mean, Jonathan, you know that I manage fixed income portfolios as well as being our market strategist. And so in our portfolios, we've been extending duration. We've been going in to investment grade corporate bonds. Look at what the spreads have done just in the last month. 10-year financial, 10-year bank spreads have come in almost 40 basis points. So we talked before about getting that duration in because we knew yields were going to come down. We thought spreads were going to come in, and that's exactly what we've seen. Obviously, we think there'll probably be some more widening as we go into next year, but I still think it's a good place where you can invest because you're going to have steady cash flow and you have a maturity date. Fixed income investors, remember, they have an out with their bonds, unlike in the equity market. So I do think that it's a place that you can invest. I think you'll get some good yield, some good cash flow. And when you have a lot of volatility in the equity market, it gives you a place to hide a little bit.
So in other words, you'd continue adding to the position, even though there has been this incredible rally.
We do. I think you have some opportunity there. Now, you have to be smart about it, and you have to do, just like you have to pick your stocks in the equity market, you have to pick your places you want to be in the bond market as well. But I think you can find some areas where you buy at positive yield to maturities, you have sufficient cash flow. That's a good place to have an allocation in your portfolio.
Victoria Fernandez, as always, wonderful, from Crossmark Global Investment. Send our best to Bob Dole. When's Bob back, Tom? When's Bob coming back on? He was here a few weeks ago, wasn't he?
Like a couple weeks ago. His lights out. Yeah.
You know, he's coming up shortly. Matt Lazzetti over at Deutsche Bank. Matt Lazzetti of Deutsche Bank. So there's been some really great calls this year. And I'm thinking of Mike Wilson on the equity market. I think maybe Citi's Andrew Hollenhorst coming out very early, saying we're going to get a sequence of big hikes, Priya on the yield curve. Matt Lazzetti, the first to make the inflation call for 23 before it became very, very fashionable.
And he and Peter Hooper and their team not only put the call, but also the axis on it. Their recession call, they made clear it was out there further. It was none of this, it's around the corner stuff. And they were real simple to get out to 23 and into 24.
Which may be the biggest question for him. Does he push it out even further? Is he going on the Max Kettner point to raise that you raised earlier?
That's a big deal.
This question of what does a prolonged recession do? Is that negative or positive for risk assets? Maybe positive in the short term from Julian Emanuel's perspective. Longer term, what does that mean about the nature of the recession?
And Neil Dutta of Renmax got company, right?
Yeah, that's exactly right.
Neil's not alone. Yeah. I think a lot of people are starting to join him just looking at the income and information.
I mean, it's completely devoid of this, but the United Airlines is the largest airplane order ever. I don't even know what that means.
But that was part of the joke earlier on when we talked about it, right?
And Lufthansa's out as well saying, surprise, it was better than we thought. These are two airline data releases. Do you think he flies for free on United?
The airline business, though, Tom, to your point, seems to be very unique, that sector right now. The amount of money that people are willing to spend on flying still this year and into next as well.
Why are you laughing at me?
If people are still willing to spend that, though, then what is all this talk about the lack of demand with respect to travel, with respect to the oil picture, if people are prioritizing travel?
Was it Morgan Stanley that talked about a golden period for some of the airlines into next year? I forget who it was precisely, but a lot of people still bullish on that segment.
They want our gold.
Because certain guys are willing to spend serious amounts of money.
You're just trying to rub it
getting business class seats to Paris.
So bitter about that. You're just bitter about that BitDog book.
You know, I looked at changing my flights next week because of these strikes in the UK and all the snow and all of this mess. My goodness, the charges to change that flight.
I walk in the United over at Newark and they begin to tear up. They're so happy.
I can tell you my phrase yesterday evening.
Good to see you again.
My phrase yesterday evening was not "my goodness," because that's not the phrase I would use.
I was going to say.
How's your remote control?
Fixed.
Is it fixed?
I was worried that I'd broken it, but it's okay. It's ready for the game.
It's ready for Argentina.
Matt Lazzetti at Deutsche Bank coming up shortly.
Keeping you up to date with the news from around the world with the first word, I'm Lisa Mateo. U.S. regulators are adding to the problems faced by FTX co-founder Sam Bankman-Fried. The Securities and Exchange Commission is accusing him of carrying out a multi-year scheme to defraud investors. The SEC also says Bankman-Fried concealed risks and used commingled customer funds. He was arrested Monday in the Bahamas after U.S. prosecutors filed separate criminal charges. Investors are awaiting U.S. inflation data that could shape the outlook for the Fed interest rate hikes into next year. The Consumer Price Index is out less than 20 minutes from now. A subdued CPI number would justify the Federal Reserve's projected half-point interest rate hike on Wednesday. China is warning that it faces a big jump in COVID cases, the country rapidly dismantling pandemic controls, and it's reopening faster than some experts have anticipated. One of China's top health advisors says if the majority of people become infected with just a few months, there will be a severe strain on the medical system. And United Airlines is betting on a rebound in long-haul travel. The carrier has agreed to buy 100 Boeing 787 Dreamliners. It's part of a multi-billion-dollar order for as many as 300 new aircraft. The blockbuster deal also includes dozens of Boeing 737 MAX jet. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Lisa Mateo. This is Bloomberg.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. It's a big week for the U.S. economy, and Bloomberg's got you covered.
My head's spinning here.
First, CPI data comes in this morning.
We're seeing things work themselves out.
This is going to be a really choppy ride.
Then, tomorrow afternoon, a special surveillance will cover the Fed's last rate decision of the year.
Power of that Fed speak is declining.
Does this Federal Reserve have the commitment to keep going?
The question is, how high do they have to go?
The CPI report this morning and the Fed decision tomorrow afternoon. Right here on Bloomberg, your global business authority.
I think FTX is very much an issue for the US, given the domicile and the nature of it. Crypto, that it doesn't have intrinsic value, and that if people wish to invest in it, well, they must be prepared to lose their money.
Be prepared to lose your money. The message from Andrew Bailey, the Bank of England governor, a little bit earlier this morning. For us, the top story, less than 24 hours before he was expected to testify before the House Financial Services Committee, disgraced FTX founder Sam Bankman-Fried arrested in the Bahamas and facing SEC charges for defrauding investors. Democratic Congressman Maxine Waters, chair of the House Financial Services Committee, had this to say yesterday evening. The public has been waiting eagerly to get these answers under oath before Congress, and the timing of this arrest denies the public this opportunity. TK, the politicians complaining, and not just the Democrats, the Republicans as well, because they wanted their moment with this guy on Capitol Hill.
Yeah, I get that idea, but, you know, John, you brought this up earlier, and you're always looking for the angle here on this. Do you really think they timed this around the committee? I mean, they had to.
No, I'm not suggesting I think that. I'm asking a question, though. I think the timing of it is pretty curious.
Yeah.
We've got a hearing slated at 10 a.m. Eastern time. Then all of a sudden he's arrested in the Bahamas, and this morning we get charges unveiled by the SEC.
Look, I don't understand exactly what the machinations were. There has to be something about his coming to testify in the United States after being in the Bahamas for a longer time. You wonder what those conversations were like, especially as the CEO, the current CEO, of FTX continues to talk not only with Congress, but also with some of the prosecutors.
So there will always be conspiracy theories, and people will offer their own suggestions as to why it happened. I was speaking to Matt Miller moments ago about this. There are a couple of theories, of course, and I'm not lending any weight to either of them. One theory is that prosecutors didn't want him further complicating the case with more public statements. I would argue we've had many public statements over the last few weeks, so I'm not sure how he could complicate it further. It would be under oath, so maybe that would make a difference. Another one, and I think this will be a conspiracy theory on the right, is that Democrats didn't want Republicans to shine a light on the amount of money that had been going towards him. But again, we kind of already knew the detail about this. And as for House hearings, I saw a great comment out on Twitter about this, as if denying the opportunity for him to be grilled by these guys. I mean, let's use that word grilled a little bit more carefully. I think we throw around that rather loosely when it comes to Capitol Hill. When was the last time you saw a grilling on Capitol Hill?
I didn't. I think the British do this way back. Way back. I remember the first time I was in the House of Commons years ago. I was stunned at the grilling that I observed in the House of Commons versus here. You know, we've got to get to our wonderful guests here, but in the inflation report in 10 minutes. But you know, my basic theme here is I want to talk to adults. I think, Lisa, you're great at this about the legal side of things. Do I really care what a politician who's not educated, you know, precisely in the law or precisely in economics or international finance care? Do I really care what they think?
No, but I think, you know, just to kind of balance the full argument out, Tom, I think a lot of people wanted to see this individual not at a forum at a conference where people had paid to watch, not at various different interviews at various different networks, but under oath, making a public statement. And that might have been a little bit different this morning.
Also in contrast to the last grilling that I saw, which was probably of Jamie Dimon on Capitol Hill or some of the bank CEOs when they were brought in, especially after the financial crisis. But that's my point. You know, put them against each other and see if there's the same kind of anger in some of the tone.
We will have to see. We have to move the story forward. Michael McKee's going, look, guys, I got exactly 8 minutes. Let's go. First, Shonali Bassick joins us, our Bloomberg, Wall Street, Bitcoin, Binance, SBF correspondent, whatever. Shonali, seriously, Lisa's focused on when we get unwrapped documents from the Southern District Court of whatever. What are you looking for that they could upset this morning as we go to these hearings?
We already have that SEC complaint, but to the point you're making, yes, we want to see that unsealed indictment from the Southern District of New York. What detail will they give about what Sam Bankman-Fried had done, and how will they speak to the potential commingling of assets here? Remember, the interesting point that you guys were making over there is if Sam Bankman-Fried keeps speaking publicly, how does it complicate or add to the case for authorities? A question here is that he's repeatedly said he did not knowingly commingle funds and he did not knowingly defraud anybody. So the question of intent is a consistent question when it comes to Sam Bankman-Fried. Did he know what he was doing? The case here laid out by the SEC says he has misled investors and that there was a lot of detail that was very intentionally left out.
Shonali, what will this hearing look like today without Sam Bankman-Fried attending?
We'll hear from the CEO of FTX now, currently. Remember, you guys were talking about lawmakers. I will say something here, though. While many Democrats took money from, I think this is so important, Democrats took money from Sam Bankman-Fried for the most part, but his deputies gave very much the Republican Party as well. One of them was giving at the same rate of Peter Thiel and Steve Schwartzman. So there's both parties here that have taken money as well as intense lobbying efforts. And so when you look at the bills that are being passed in Congress tied to any potential future crypto regulation and consumer protections, you do have everybody's hands dirty. And on top of that, it makes it more complicated when you look at where the industry's lobbying efforts have gone. So a lot of complications here in terms of pushing the ball forward, in terms of knowing the right thing to do to protect consumers.
Shonali, we're going to push things forward together in about an hour ahead of that hearing. I'm looking forward to catching up with you. Shonali Bassick down in Washington, D.C. For those hearings, we'll catch up with Anne-Marie Hordern as well. We need to focus on one thing. It is 7-8 minutes away. It is inflation data in America, and Mike McKee is going to walk you through what you need to look for in just a moment. Morning, Mike.
Morning, John. I feel so left out because this is all about the value of your dollar, not your crypto coin. But what we're looking for is another slowdown in inflation, still rising, but on a headline basis up 0.3 instead of 0.4 the prior month, and the 0.3 gain same as the prior month for the core, which really drops because of base effects the year-over-year numbers down to 7.3% for the headline and 6.1% for the core. Now, something that's really interesting that we have just developed here on the Bloomberg, this is your free advertisement, the ECAN system has inflation swaps, which are pretty good at projecting inflation. The Cleveland Fed is another organization that does some nowcasting on what we think we might get. And basically, the inflation swaps are suggesting we could have a downside surprise today to 7.2% instead of 7.3%, which would raise all kinds of questions in the markets about what the Fed is going to say tomorrow about how high they need to go and how fast they need to get there.
Mike, what's the relationship between the labor market reports that we've been getting that have come in hotter than expected and CPI that's been starting to trend lower?
Well, that's the problem. According to Jay Powell, the idea is that service industry prices are still rising while goods industry prices are deflating. And the problem for service industries is most of their costs are labor costs. And so they're still having to pay up because a lot of those jobs are not the most attractive, and it's been hard for them to find people. So as long as the labor market stays strong, particularly in the service sectors, then they anticipate they're still going to have an inflation problem.
Mike, you read my mind on Cleveland. They have two series. They have the nowcasting series, which has come down. I get that. You were mentioning that. And they also have their Cleveland measurement of core, which again is rolled over. What is the significance of 2 data points in a row of rollover versus 1 or 4 data points? What's the pro-mathiness of OMG, 2 data points where we roll over?
Well, 2 data points isn't going to be pro level. We'll call it extremely experienced amateurs, maybe. Powell talked about this a week ago here in Washington when he said that we are not as excited by the October inflation report as Wall Street because it is just 1 month. They're going to want more than 2 months as well. They're going to want to see 3-4 months of declining month-over-month inflation to give them some confidence that it is going to come down, because there's always one-offs in this data. We'll look for it today that surprise people in terms of their rise or fall for the month.
Mike McKee, you're going to break down those one-offs in just a moment. Mike McKee sticking with us. Coming up on the program, inflation data in America for the month of November. Will we see a cool down in the inflation data ahead of that Federal Reserve decision? Equities right now up 0.6% on the S&P.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
November inflation data in America, moments away, and going into it, a spike in equities, the S&P up by 0.8%, and a move lower in yields on a 10-year by 6 or 7 basis points to 354, on a 2-year down 3 basis points to 434. We're looking for year-over-year headline to come down to 7.3, looking for core month-over-month to come in at 0.3. With the economic data, here's Mike McKee. Morning, Mike.
Morning, John. Well, we get a downside surprise for headline, at least, with the headline CPI month over month up just 0.1%. It was up 0.4 the prior month, and the expectation was for 0.3. On a year-over-year basis, that puts us at 7.1%, which is even more of a downside surprise than the inflation index traders we were talking about. On a core basis, we're at 0.2, which is down from 0.3 the prior month, and lower than the 0.3 that was expected, puts us at 6%, which is lower than the 6.3% we saw in the month of October. Shelter, the largest contributor to the monthly all items increase, it offset declines in energy prices. Food up 0.5%, food at home up 0.5%. So energy down, but food up for the month. Energy down 1.6%. Natural gas, gasoline, both declining during the month. So it does look like we have a downside surprise. And let's see what kind of market reaction we're getting, John, while I look at where we also saw numbers.
What do you think's happening? Equities absolutely flying. Similar move to the move we saw last month, perhaps not as large, but we're higher by almost 3% on the S&P 500. A shift higher going into the data, a big shift higher coming out of it. You want to see a move? Get to the bond market, bring up 2s, bring up 10s, bring up 30s if you like. Have a look at the belly of the curve as well. The 2 years down 17 basis points to 420. The 5 years down 19 basis points to sub 360. The 10 years down 17 or 18 basis points to, let's call it, 343. And once you've figured out what's happening with risk and what's happening with the bond market, you can take a stab at what's happening with a euro dollar. 106 handle on euro dollar this morning. 106.35. A move of 0.9%. So equities firmer, yields lower, and Tom, this dollar a whole lot weaker.
Dollar moving, and what I notice here, and I got to use the shift word, and you've got here not much nuance in the bond market. This, John, is a movement of everything to a lower yield structure. There's not much spread dynamics I'm seeing right now.
So the question you would ask this morning, Tom, off the back of this, does this validate the step down in Fed tightening from 75 to 50? I think a lot of people would say absolutely. Does it encourage a Federal Reserve to back away in the same way maybe Chairman Powell did in the last couple of weeks?
What I would say is you need to revisit the bull analysis on Wall Street, and I would lead with Mr. Chadha at Deutsche Bank. I think you've got to say to yourself, Binky Chadha, maybe he moved out the call to an optimistic call, but there he was, a resilient bull with others. And you mentioned Neil Dutta and economics and other optimists out there, but you've got to at least revisit their why. of why this is happening. Me, I go back to disinflation is stochastic. You go up, boom, it gets fixed, and that's what's happening.
You mentioned
right now.
Neil's name and what popped up on my screen. Bloomberg message, Neil Dutta.
What's he saying?
So, average hourly earnings rose and inflation moderated, which means real incomes exploded over the month. Stronger real growth means what? Over time. Neil is pushing back hard against the gloom. I have to tell you, in the market right now, we fade just a little bit, run by 2.5% on the S&P. Mike McKee, when numbers like that drop, you don't trade nuance, you just go, go, go. And that's what we've seen on the screen in the last couple of minutes. Can you talk to me about the nuance? What's happening beneath the headlines, Mike, that you see?
A lot of things that are happening, John, are things that were expected, and maybe we just need to redefine the word transitory. There, I said it. We don't know if Jay Powell would, but used cars and trucks down again for another month. This is the third, fourth, fifth month in a row for used cars and trucks to be down. They're down 2.9%. We're also seeing motor vehicle insurance up 0.9. That's been continuing to rise, but airline fares down 3% on the month. Medical care services down 0.7. Now, this is a methodology change by the Bureau of Labor Statistics, and it was expected to subtract from CPI, and it is doing that. So we're seeing a lot of the return to pre-pandemic kinds of price levels here that really are pushing down on CPI fairly quickly. Food still a major issue, with food at home up 0.5%, right, and food overall up a 0.5%. So Americans are still going to be feeling it, although gasoline prices down significantly.
Mike, are we being cumulative this morning, channeling the vice chairman? How cumulative do I feel right now?
Well, you're feeling a little bit better, of course, because this is the second month in a row where we've had a downside surprise. Not just that it's come in a little bit, but it's come in a lot on a year-over-year basis. Part of that base effects, but part of it, inflation may be fading faster than some people thought, other than Neil Dutta. And so at this point, it's starting to look pretty good for the Fed. The question is not what they do tomorrow. That's ratified. They're going to do the 50 basis points. But now, how does that affect, if it does, the dot plot going forward, and what they think the forecast for inflation is going to be for 2023? That'll have markets readjusting tomorrow, definitely.
Michael, before we let you go, is there anything in this data that suggests that there is this rapid disinflationary trend under the hood, regardless of whether consumers keep spending, given that they are still employed and given that they are still getting wage gains?
Well, there's nothing immediately that jumps out that would suggest that we're going to get derailed by anything. As I mentioned before the report came out, there are always surprises, but there are downside surprises this time, really. And what it appears is that basically the various categories are doing what analysts thought they would do. The magnitudes may be a little different, but the things that are supposed to be declining are declining, and the things that might be holding up are still holding up. So as the Fed makes its forecasts, it maybe has a little bit more confidence about where we are.
Mike McKee, thank you, sir. Looking ahead to your Fed coverage tomorrow as well. The S&P move fades a little bit. Let me just run you through the price action. We'll go equities onto bonds and then into foreign exchange. Equities now up by just a little more than 2% on the S&P. The move at the front end of the yield curve, we were down 16, 17, 18 basis points at one point on a 2-year. We're now down just 10. Your 2-year 4.27. So directionally the move sticks, but the magnitude of it comes off just a little bit. You see a similar move on euro dollar, just about holding on to 106. Euro dollar firmer by 0.7%. I think overwhelmingly right now on the street, Tom, people will still believe this Fed hikes 50 basis points. The question will be asked, though, and I have to say up front, for those of you about to write in, I'm not asking this question because I think they will. I'm asking this question because other people will be asking it. Does 25 go into the mix tomorrow? Do we get any dissent on that FOMC?
That'll be in a press conference. Yeah, I don't think we see it in a statement.
You'll see it in a statement if there's dissent.
Yeah, I can, but it's different than Bank of England dissent. To me, Bank of England dissent is real intelligent dissent.
Oh, you're saying
You're codified from Greenspan. It's an odd thing.
I'm sure the Fed will be super happy with that characterization of dissent at the Fed, Tom.
Futures up 79, Dow futures up a solid 1,000 points, maybe 900 points here from the bottom yesterday. Right now, as we do, we have a conversation with an expert. He has been fabulous out front on the slowdown in GDP. Matthew Lazzetti joins us with Deutsche Bank with one of the great calls of 2023, a recession, but it's out there somewhere. I've got to ask you your arch call. How have you recalibrated your recession call, and how do you recalibrate after this inflation report today?
Sure. First, thanks so much for having me. No doubt, you look at the headline numbers, you look at core, better than expected decelerations in a number of the items. I think, interestingly, we didn't mention it yet, but rent and OER were actually strong. They rebounded and bounced back up 0.8%, 0.7%. Those are the sticky items we know are going to be there. I think in terms of, the market certainly doesn't look at nuance at this point, and I think rightfully so, because it's a lower print. But if you think about some of the nuances here, Mike mentioned you have medical services inflation in the CPI very, very weak. That's something that sticks with us throughout the rest of the year. But it's a completely different story in PCE. And so I think a big question and kind of story over the next year will be PCE and CPI are going to converge a lot. They're going to converge a lot because you have different measures of healthcare inflation in the two of those. And you're going to see disinflation in both of them, but it's going to be less disinflation in the metric that the Fed looks at and the metric that the Fed targets.
How do you think Chairman Powell navigates this one tomorrow?
It's one where obviously they can step down to 50 basis points. I really do think that they want to step down to 25 basis points as quickly as they can. And so data of this nature allows them likely to do that in the February meeting if we get another data point like this. And that really then allows them to calibrate policy the best that they can. If there is a path to a soft landing, going down to 25 basis points in February helps to optimize that. I think they also want to avoid this kind of stop-start tightening cycle that they may have to do, meaning pause only to re-hike at some point. I think they can avoid that the best by stepping down to 25 basis points at the February meeting. This type of data helps that.
Well, although I do want to go to Neil Dutta's point, because it is a salient one, that this essentially gives people more money on a real term, on a real basis, in order to spend further, which only prolongs this economic cycle for longer. How do you factor that in to the flip side, the bullish case, which is saying that there is this natural disinflationary cycle that is taking hold and set to accelerate?
Yeah, I think it's best to think of that through Chair Powell's three different components that in the basket. We're seeing very clearly core goods and disinflation and deflation coming in. Rent and OER, we think 12 months ahead, given private rents, are really going to be decelerating. It's that third part of the basket that creates a lot of uncertainty and is tied to the labor market and wage growth. And there, I think, core services, ex-shelter, where we're likely to see in healthcare and these other components as we look ahead. If you're not seeing demand destruction as much as the Fed needs, if you're seeing financial conditions ease substantially on these data, it does make their job harder on that part of the basket. We can still see a lot of disinflation, but the question is, does that get us simply from where we are to 3%? How do we get from 3% to 2%? And that's, I think, the more difficult part.
I think our number one question for Chairman Powell tomorrow, the risk of doing too little, does it still outweigh the risk of doing too much? How do you think he answers that tomorrow?
I think he still leans towards yes, meaning that they still want to lean towards over-tightening rather than under-tightening. But I think the committee is very divided on that question. And I think he will have to balance that. And the more data we get of this nature, certainly the risk balance comes into better balance as we look ahead. Stepping back, it's 2 data points. We're still at 6% above core CPI. They've been surprised a few times in the past. And so I think that they will be very cautious about pulling the plug too early.
I think that's why I'm far more interesting, Tom, in the risk management question for Chairman Powell.
Yeah, you brought this up.
Agree with Matt. It's a couple of months of data. We'll get the projections for whatever they're worth. But ultimately, the risk management question tells you a little something a lot, actually, about the bias of this Fed going forward.
I agree. And I'd fold into that another phrase, financial stability, which has really slipped away in the dialogue the last number of weeks. It was there big, particularly at the IMF meetings.
Well, it helps when the S&P's back at 4K, right? People aren't so worried about financial stability, apparently.
We're going to see it. I mean, we've got to continue to advance here. John, are we through highs yet in this recovery? I mean, we went up and
we
then
faded. We spiked, we've pulled back. But I mean, there's still a move for more than 2% on the S&P. It's a punchy move.
Yeah, 2.5% up.
Yields down by 14 or 15 basis points right the way through the curve. Two's out to 10s, and that dollar weakness in the mix. Euro dollar 106.34.
Is Dow 35,000 a big deal?
It's a massive deal. I've got my cap ready to go, Tom.
John, very good. I'll get you to 9 a.m. As well. Matthew Lazzetti of Deutsche Bank, thank you so much.
Thanks, Matt.
This is important now. We need to get an equity update as well. John, do you want to tell us about the 9 o'clock show?
I mean, I'd love to, but you were so eager about moving on.
Well, I want to move on, but continue, I'm not focused. Croatia beat Argentina.
You're not focused.
We've had, with the news flow that we've had today.
Shocked.
I mean, Troy Gayeski's only booked because you want to talk World Cup soccer with him. Does Croatia have a chance?
Too, of Morgan Stanley. That's the tease, is it? Troy's here to talk football, FS Investments. Matt Hornback to talk about what happened with England from Morgan Stanley. Gagi Chowdhury's given us the preview for tomorrow, France.
Yeah.
Big
That looks
Mbappe
good.
fan. Looking forward to that conversation in the next hour on Bloomberg
You
TV.
didn't answer my
Is that
question.
the
Does
tease?
Croatia have a choice? Lazzetti, does Deutsche Bank just stop?
Matt's not even sat
he's
down.
literally walking off the
does
set.
Deutsche Bank, like, does the whole place just stop at 2 o'clock?
Yeah.
Okay, you can go now.
Can I go too? Can I leave as well? I can leave as well. Wonderful. Does Croatia have a chance?
Yeah.
The answer is yes. Of course they have a chance. Look what they did to Brazil.
Okay, thank you.
Okay.
That's the final word here.
All right,
Patiently
we're done.
waiting is Gina Martin Adams, Chief Equity Strategist at Bloomberg Intelligence. Gina, as you well know, and Liz Ann Saunders, I think the other day had the put call ratio out at a gloom level. How do I deal with the zeitgeist gloom and caution that's out there, and the idea of it's an equity market running away from me? How do I deal with that emotion right now?
Yeah, I think it is really about having a long-term view, Tom. I think you could get very caught up in these day-to-day swings, particularly in the midst of a massive bear market. When you have extraordinary volatility, it usually is, unfortunately, symptomatic of a continuation of the bear rather than beginnings of an uptrend. So I think you want to be really careful to draw too many conclusions from very volatile days like today is the first sort of lesson learned. The second thing to consider is sort of what is the appropriate valuation measure for the equity market over the long term. How much do you really want to pay for stocks? We're trading at roughly 17.5 times earnings. When we take out the biggest names in the index, we're trading closer to 17 times earnings. So there is some value in the equity market, but is the equity market at large really cheap just based on this notion that CPI is coming down faster than anticipated? You would struggle to make that argument. So I think you keep your eye on the longer term, you keep your eye on the appropriate allocation for the macro environment, and just think through where you want to add capital to the degree you want to take advantage of the dips. Where are the really long-term upside prospects as an equity investor?
Let's say that this is some sort of disinflationary bent that lasts and actually gives a bit of breathing room to the Federal Reserve and perhaps reinvigorates this discussion of a soft landing. And we don't get the downward revisions to earnings per share of the S&P 500 early next year like so many people are expecting. Is that a good thing for the stock market or a bad thing?
Well, first, let's just call it as it is. To say that 7.1% CPI is disinflationary really is symptomatic of the environment that we've been in. You know, disinflation is an environment where we're seeing much more contained inflationary prints. So I think that that's why you explain the volatility, right? This is not even close to disinflationary. This is still very strong inflation that the Fed is going to have to continue to tackle. Yes, we like to see it coming down, but it is nowhere near a level of comfort. Now, in terms of estimate revision, it is something we watch really carefully. I like to watch estimate revision momentum, and we did see a really strong downdraft in estimate revisions result as a result of the most recent earnings season. You'd like to see that estimate revision momentum stabilize first. You will most likely continue to see downward expectations, but the pace of that downward revision is actually the most important indicator to watch at lows.
Gina, microdata, I know you hate when I do this, but I'm going to do it. United Airlines, the biggest Boeing order since time began. What does that signal to you about the spirit of industrial and manufacturing America?
Yeah, I think it's actually really interesting, Tom. It's one of our bigger, longer-term calls as industrials actually popped toward the top of our sector scorecard this quarter for the first time in a very long time. And one of the reasons to be optimistic about industrials is the order cycle. Really bizarrely, at this stage of the cycle, normally you'd be headed into recession with too much manufacturing inventory, too much excess that had been built through a cycle. And that's not the case this time around. As a matter of fact, we're starting to see, generally stabilizing to improving long-term demand in certain sectors that should power an industrial recovery. You layer on top of the airline story things like, decarbonization, creating a wave of infrastructure investment, things like the supply chain management process, creating another wave of infrastructure investment, and you can make a case for order growth to accelerate very rapidly over the longer term. After 20 years of no orders, this is a fairly fantastic environment for some of the industrials.
Gina Martin Adams, thank you so much. And again, we've got SPX up 111 points, 2.8% there. The Dow up 700 points in futures market. VIX comes in a solid almost 3 points from that 25 number back to 22.12. It's extremely important that we dovetail in here, first of all, to find the one congressman in America that will root for Croatia today against Argentina, and that would be the gentleman who is the fabric and soul of Dutch America. This is in western Michigan, north of Kalamazoo. It is the 2nd Congressional District of Michigan. Yes, conservative. Yes, Dutch American, but also fixated on the new finance of America. Bill Huizinga joins us right now, Republican from Michigan. Thrilled he could join us today. I've got to talk World Cup with you, Congressman. First, though, you've got to be rooting after what the Netherlands went through with Argentina. I mean, Croatia has a chance today, right?
Yeah, Croatia's got a chance today. Now, I will note that the Dutch beat the United States. That was a little tougher conversation, but I know all the football talk has gotten me very excited about my Detroit Lions. So
that's true.
The hottest team in the NFL. So a little different football, but
it is.
It's going to be a good day.
I've got Michael Barr briefing me on that on Bloomberg Radio on a daily basis, a legend from Detroit to the East. Congressman, I must ask you about this meeting this morning at 10 a.m., all the emotion and all the politics. I want you to take the bizarreness of Bitcoin, crypto, blockchain. How do you explain this moment to your conservative constituency?
Yeah, constituency and frankly to colleagues as well. And we've all of us on the Financial Services Committee have had colleagues of ours coming up to us, and not to mention obviously the constituents saying, "What is going on with this?" And the sad element of this, Tom, is that this situation is creating the conversation, which is not a healthy one or the direction we should go, which is maybe we should just ban all of this. You know, it's too confusing. It's way too many options and opportunities to cheat, lie, steal in it. So how about we just ban it? Well, that's not going to happen, you know, and we've got to remember that this is more than just about crypto. It is about the blockchain technology that underlies that, and that is going to be transformative for the financial services, but also healthcare, you name it. I mean, my background's in construction and housing. You look at what you're going to be able to do in that field with blockchain technology. It's all very exciting, but this which appears to have all the hallmarks of Enron and Bernie Madoff blended together, named Sam Bankman-Fried, that is putting a very different spin on what the conversation has been here in Washington.
Congressman, how do you view the timing of the arrest, given the planned meeting this morning on Capitol Hill?
Well, I would assume, or certainly let's hope, that that Gensler's revised calendar release yesterday had nothing to do with that. But I have been talking to a number of my colleagues who were former prosecutors who are saying, well, wait a minute, if you're giving a witness or a potential mark an opportunity to come in under oath, spend 4 hours in, just freewheeling conversation with Congress where they might just end up perjuring themselves, why would you not give them that opportunity? So it's got a lot of just kind of question marks around that about the timing. I welcome his arrest. What I don't understand is why it wasn't a week ago or a week from now. Why did it have to be yesterday or last evening?
What do you think would have been accomplished, and what do you want to be accomplished at today's meeting?
Yeah. Well, and of course, as you know, we're having the new interim CEO, Ray, is coming in, and I would have wanted to hear his answer. The conversation that I was going to have was going to be surrounding FTX.com, the separation between U.S. and those international funds like that. I wanted to hear from both of them what their take was and whether there was any evidence of that, because I want to protect U.S. consumers and I want to protect U.S. taxpayers as well, because there's obviously been some calls for we got to bail it out, which can't happen.
I mean, people have been looking for the Secretary of Treasury, whether it's Yellen or before. I mean, this stretches back a number of years and administrations, Congressman, but you got to believe at some point we decide if Bitcoin and all that is an asset. Is it blottable? Can you audit it? And can it provide tax advantage when it has a huge gain to the IRS and such? Are we at that point right now where we need to codify Bitcoin to be an IRS item?
Well, there is not consensus of that yet, Tom.
Agreed.
And look, you've got some arguing it's a commodity, some arguing it's a security. You know, we like things to be either fish or fowl here in Washington, D.C., and it turns out this is a platypus, right? It's got hallmarks of both, and we have not reached that consensus. Clearly, Chair Gensler believes, well, he did believe when he was head of CFTC that it was a commodity. He now seems to think it's a security, but you know, we are going to have to wrestle with this one right now. I should note also, by the way, we have not seen Gary Gensler in front of our committee in over a year. It was last October. So Lisa was asking, you know, what kind of questions you would like to ask today. I'd like to ask, what has the interaction been with the Securities and Exchange Commission leading up to this point? And that's a very important thing. Sam Bankman-Fried was here in December of 21. It's ironic that he would have been here more often than Gary Gensler in front of our committee.
Congressman, I've got to ask you this, and we do this with all of our politicians, particularly when they're not lawyers. You are steeped in the core industrial process of America, in sand, gravel, crushed stone. That's what you do out in Western Michigan. How do we jumpstart investment in those core industrial and housing construction processes? What does Washington need to do to help somebody not busy in gravel right now?
Yeah, well, and here's the interesting thing, Tom, is we actually are pretty busy. Infrastructure has continued to go on, and your last guest was talking about that. You know, some of those underlying pressures that normally would have had us going in a different direction as we've seen inflationary pressures still continue. There's still a lot of activity, but we've got to solve the supply chain. Part of that is in construction is making sure that we've got domestic oil production and world oil production up, because 30% of a barrel of oil goes into PVC pipe, shingles, asphalt, all the siding, all of those things. So if we're looking at housing and to infrastructure, we've got to make sure that the materials and the labor is actually there and available.
Well, Congressman, thank you so much for your time today. From the 2nd District of Michigan, Bill Huizenga, thank you for joining us. We've got to get back to the markets. Lisa's screaming at me. Let's go. VIX in 3 big figures as well. Lisa, what do you see on the Bloomberg terminal?
Right now, I'm looking at the biggest move in 10-year treasuries going back to November. If you take a look at just how much yields have come in, price up, yield down, you can look at the NASDAQ up nearly 4% ahead of the open, flying on this prospect of perhaps disinflation coming through, making it easier for the Fed to step away from the brakes and really reassess policy.
How do we attach the congressman there, who was a gravel business, and Dutch American, just core ethos of construction in America, with what we hear from Jim Glassman of J.P. Morgan, as he talks to people like that for J.P. Morgan every day? Things are not that bad. To Neil Dutta, market economics, to what we saw from Scott Kirby at United Airlines today. The recession gloom, it's just,
which is a reason,
help me.
Well, which is the reason why Max Kettner goes against the
Big
grain
shift.
and says,
Nailed it. Yeah.
we're not necessarily going to see that big downturn, those big downward surprises in earnings per share early next year. Again, though, what does that mean longer term? What does that mean in terms of the ability to beat inflation? Because we're still coming down from a very high place.
An eventful day. We'll have the Fed meeting for you tomorrow and our special coverage in the afternoon. But before that, in 1 hour, with Congressman Huizenga, the Financial Services Committee on Capitol Hill. Good morning.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
So the inflation environment has been changing a little bit. Inflation's been very low for 25 years. Now people think inflation's coming back. How are you going to deal with that?
I think many of the tools that we've historically used to battle inflation no longer work in the same ways they used to. I think people oftentimes thought of housing as a way, or especially retail and real estate as a way to hedge against inflation. less and less possible the way we've invested in it. I think commodities similarly have been thought of as a way to hedge against inflation. There are challenges over the long term. Equities have been a hedge against inflation. We will continue to do what we have done in the past, which is build a diversified portfolio where there are many different opportunities that have the possibility of hedging against inflation, because different types of inflation have to be hedged in different ways. So if it's a very quick increase of inflation as opposed to a slow rise of inflation, is it temporary? Is it a long or persistent type of inflation? So for us, I never model myself an economist that can predict where inflation is going. And so what I need to do is build a diversified portfolio where there are different options that can fight the different types of inflation, and to pay close attention to it. And you know, fundamentally, it's done through the equity markets.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
A downside surprise on inflation in America. Equities absolutely rocketing higher, yields lower, the dollar weaker. Equity futures right now up 2.8%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. Inflation cooling down, the Fed coming up next.
This is a really interesting CPI report.
The CPI data, very important.
It's going to determine the narrative.
No doubt. You know, you look at the headline numbers, you look at core, better than expected.
And then we have the Fed announcement.
What are we going to hear from Chair Powell?
Obviously, they can step down to 50 basis points.
The Fed is hyper-focused on bringing down inflation.
What the market is saying is that the Fed is expected to start cutting rates in 2023.
Data of this nature allows them likely to do that.
It will all depend on how long inflation is going to be staying elevated.
The Fed is saying that they're going to keep rates high until the job is done, until inflation comes down.
Higher for longer.
They're trying to monitor how the economy is reacting to those hikes.
The Fed is waiting to be, proved right on the inflation side.
We're already trading the headlines. Let's get you some nuance. Here's Mike McKee for more. Hey, Mike.
Hey, John. Well, this is the kind of numbers the Fed is looking for. It does ratify the 50 basis point move tomorrow. But the question now becomes what happens in 2023. You can see that headline and core inflation came in lower than expected on a month-over-month basis, which drops the headline CPI to 7.1%. and the core to 6%, lower than people anticipated for this month of the year. What moved? Well, gasoline was down 2% after rising the month before, so no surprise there. We've seen the prices come down at the pump. Food is still a problem, up 0.5%. And here's the one that people are still watching, owner's equivalent rent, basically what it costs to buy your house or to rent your house. So if you were buying it, it would be the rental cost. Up 0.7. That's a rebound. But the Fed has already said we know that is coming down. So in essence, you can look at the numbers we got today and think they're kind of really lower than that. Used cars perform as expected. Apparel did not. It was up 0.2. We thought there'd be a lot of sales. The good news, bad news part of it is that goods prices are continuing to decelerate down or up rather by just 0.75 percentage point, and services are continuing to accelerate, unfortunately. But take out housing and energy, you're at 5.1% versus 5.8%. So the Fed is making progress on the whole thing. Now, that's what happened. What's going to happen? That's going to be the interesting thing going forward. We talked earlier today about the inflation swaps market. The inflation swaps market now has the overall CPI at, are you ready for this? 3.4% by May. And that is the month that the markets think, futures trading thinks that we are going to see the highest, the peak of the Fed funds rate. It's come down about 10 basis points, but 4.86%. The Fed has never brought inflation down until it raises the Fed funds rate above the level of inflation. And it looks like the markets are betting that is going to happen by May. So it may not be a recession, it may be a drop in CPI that people are looking at to start pricing in some rate cuts.
Mike McKee, Chairman Powell, over to you. Looking forward to your coverage tomorrow, Mike. I always am. Equities right now, going into the opening bell. Equity futures up by 2.9% on the S&P. Yield to lower at the front end by almost 19 basis points on a 2-year. Let's call it sub 420 on a 2-year yield in America, and a ton of dollar weakness in the mix as well. Euro dollar 106.56. Euro dollar up by more than 1%. With us now is Morgan Stanley's Matt Hornback, Troy Gairsky of FS Investments. Matt, first to you. Your reaction to the CPI report from 34 minutes ago.
Well, John, thanks for having me on. Look, I mean, investors didn't think inflation was going to come down as fast as economists were forecasting, and now it's coming down even faster than economists are forecasting. I think this is a big deal for macro markets. It's a big deal for the outlook in 2023. We published our 2023 outlook about a month ago, John, and already markets have moved in the direction that we were expecting, just much, much sooner, which is, again, is in line with CPI falling faster than any economist on the street was projecting.
Troy Gairsky, your thoughts, sir?
Yeah, I think, as Jim was saying, one thing that's so remarkable about this cycle, whether you look at real estate or equities or bond yields or now inflation, it's not just the magnitude of the moves, it's also the speed, right? And so what went up really fast is now coming down faster than most thought as recently as 6 weeks ago. And I think, you know, from an asset allocation standpoint, if you think about what this means, it's, hey, if you were overly allocated to equities and fixed income throughout this whole year, you're breathing a bigger sigh of relief that perhaps there isn't as much downside in the future as there could have been before inflation came down. The darker side of that interpretation, though, John, is, you know, if you're putting new money to work now, it's like if you blinked, you missed it, right? We're back up to 18 times next year's forward earnings, which is still assuming a 5% earnings growth, which clearly won't happen if we enter a recession. And you know, the 10-year, it's like, man, we got to 4.25 in a picosecond, and we're already sub 3.5. So it took 7 north of 8% CPI prints just to get you a 4.25 10-year for a picosecond. So, you know, good in the short term, good news if you're over allocated to duration and beta. But over the long term, you know, it just reiterates the need to look elsewhere for things that can actually make 7, 8, 9% type returns.
Well, I know you've got a suggestion for that. We'll get to it a little bit later, I promise, Troy. Matt Hornback, I want to come back to you. We heard from President Harker of the Federal Reserve in the last couple of months, and he talked about inflation, and he described it as up like a rocket and maybe down like a feather. And Matt, what I hear from you is that you're pushing back against that view going into 23. Matt, can you tell me, when you look beneath the headline number for the inflation data, the report we got this morning, what is in there that makes you believe with conviction that we're going to continue this trade, keep coming down and maybe quicker than people anticipate?
Well, John, I don't think you have to ask me. You can ask the Federal Reserve. What they've been focused on more recently are the lags with which monetary policy operate. Now, these lags are traditionally thought to operate somewhere between a 12 and an 18-month time frame. Well, if inflation is coming down like within, essentially 6 to 9 months of the Fed taking policy rates higher off of the zero lower bound. If inflation is coming down 3-4 months after the Fed's balance sheet has begun to shrink, all of a sudden it completely reframes that 12 to 18-month lag between monetary policy tightening and inflation coming down. So if you think about it, John, the policy rate at the end of this year will be somewhere around 4.5%. Maybe it goes up again in 2023, but regardless, if the policy lags are already starting to put downward pressure on inflation, in addition to fiscal stimulus no longer being the boon that it once was, you're talking about supply chains improving pretty dramatically over the course of the past quarter or two. All of a sudden, you're thinking, wow, maybe inflation can come down a lot faster next year, which of course will then have implications for how long the Fed is going to need to keep policy this restrictive. I mean, John, we're talking 200, 250 basis points of policy restriction. These are the types of levels of restriction we haven't seen in decades. I don't know if the economy will be able to deal with that level of restriction all throughout 2023.
So, Matt, you're bringing up some really important points. So let's dissect some of it, just piece by piece. Got the terminal rate, how high the Fed ultimately goes, and then the length of time that they're going to stay there. So let's deal with the first bit first. 460 was the median dot in 23 in the last set of projections from this Fed. Overwhelmingly, as I go through the research, I see numbers like 5 to 525. I see that number from Bank of America, from Citi's Holland Horse. They're looking for the dot next year, the median dot for 23, to rise to maybe 5.25. Goldman Sachs gets the number 5.25. Matt, what do you expect they're going to signal tomorrow? And ultimately, where do you expect it lands in reality next year?
So, John, you didn't mention Morgan Stanley in there, and that's why you have me on, because we don't agree with that view. And we think it's possible that the median dot for 2023 gets up to 4 5/8, so 4 7/8 rather. That's 4.875 or 4.9 as you would see it on the dot plot. But we think there's a very good chance that policy doesn't get that high. It would seem to me that after this type of report, that the soft landing the Fed is looking to engineer is on course. And so you don't necessarily need to drive the economy into recession to bring inflation down. That suggests to me you could have a policy rate that peaks below 5%, which is in line with Ellen Zentner, our chief U.S. economist's call for policy.
Troy, do you agree?
Yeah, so I think there's what the Fed should do and what the Fed ultimately does, and those are very hard to dissect in real time. We'd still go with 5 to 5.25 for the time being. I think what this report does is it dramatically reduces the probability of going above 5 to 5.25, and it also does pull some wiggle room for the Fed to cut towards the back end of next year in the event that we enter recession Q2 or Q3 as unemployment ticks higher. And I think Matt, and his team, like led by Mike Wilson and others, have been articulating this case as we have. Ultimately, as the Fed ceases tightening on the front end, behind that, the balance sheet continues to shrink, and so markets are going to have to deal with a drain of liquidity in the short term. But ultimately, when we roll over into recession, which still looks highly probable to us right now, given that the U.S. consumer is deteriorating, again, at a very rapid speed in terms of withholding tax, in terms of if you look at spending versus inflationary pressures and real incomes, and just look at where savings rates have gone, John, 7.3% before the pandemic, and now down to, a 2 handle. So there's not a lot of dry powder left to spend. So when that ultimately happens, it becomes more about a growth concern, revenue dropping in terms of nominal GDP, and ultimately drop in earnings by 10 to 20%. So, that will more than likely be the final lay down for equities this cycle. But this report is important because it really puts 5 and 5.25 at more of a top. And it does give the Fed some wiggle room to cut towards the end of next year, very modestly, not aggressively like they've done in the past, but that does give some relief to the economy late next year or early 24.
Troy, let's pick up on that, because I'm getting pushback on the growth side of that equation from Neil Dutter at Renaissance Macro, who this morning said real incomes are up, which helps consumption. The dollar is down, which helps manufacturing and exports. Rates are down, which helps residential investment. Credit spreads are narrowing. It's good for capex. The Bloomberg News consensus sees flat GDP in the first half of 23. Neil says good luck with that forecast. And Troy, I've got to say, Neil's not alone. Max Kettner of HSBC said this morning: we increasingly believe the widespread belief of a weak first half is misplaced. He went on to say that activity data is still surprising to the upside. Both top-down and bottom-up expectations have been downgraded so much in recent months that it makes further positive activity surprises likely. Troy, just a final word from you on that.
Yeah, so you'd get no disagreement from us that the economy is going to continue to expand in the first quarter and more than likely the first half. I mean, the soonest we could see recession right now is late Q2. And arguably the latest is Q1 of 24. So yeah, I think the first half, given the momentum of the consumer and the fact that CapEx is picking back up, that makes a lot of sense. But you know, ultimately, if you look at the trajectory of the ability for the consumer to spend, as soon as the labor market starts to meaningfully weaken, which is effectively what the Fed still wants to happen, and when you look at all the wealth destruction going on in housing, you look at the fact that, you know, I'd like to see that data point that says real incomes are up. They're up 1% since the pandemic, and they're certainly not up the last 12 months. It just means we're in for a milder recession, much less severe than we had in the pandemic or the global financial crisis, much more in line with what we had in 01. But ultimately, earnings will suffer more from that, again, principally from margin compression as opposed to a loss of revenue, as we typically see in recessions.
Matt Hornback, final question. November 4th, shortly after we got the payrolls report that morning, the 2-year came very close to 480. It's down to 415 this morning, and it's negative 23 basis points on a session. Matt, can you say with some confidence that that was it back in early November? That was the peak of this cycle? We're done with that?
John, that was the peak in rates in this cycle, for sure.
Matt Hornback, Troy Gayeski sticking with us. Coming up on this program, the growth backdrop and what on earth is happening in China. COVID ripping through China.
When China reopens, it's not quite ready to reopen in terms of its healthcare system, its immunization position. There's a big reopening to come in China. I don't think it's happening now.
That conversation up next.
Is there still room for Abenomics to be carried out in full in the way that Shinzo Abe imagined it?
The economic situation that Prime Minister Kishida faces today is very different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women. One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs to be done to quote-unquote revitalize Japan.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
there's a big reopening to come in China. I don't think it's happening now. When it does happen, I think you are going to see a very strong lift in growth. China has been seriously depressed by the COVID problems, and it's going to continue to be so for a little while. And I think it will boost commodity prices.
Uncertainty gripping China as COVID cases surge amid rapid reopening measures. Beijing postponing a key economic policy meeting, which was set to begin on Thursday. Even banks setting up contingency plans, with traders calling out sick and trading volumes falling. For more, let's get to Damien Sassower of Bloomberg Intelligence. Damien, it was that last line that got my attention this morning. The COVID cases are piling up that quickly. We're seeing volume drop away in markets. Damien, is that right?
Yeah, no, absolutely. You're seeing trading volume in dollar yuan falling off a cliff, really, because traders in Beijing can't go back to work. But Jonathan, really, what this for me means is that most people who are looking for 5% growth in China in 2023 are expecting consumption to lead the way. We have activity data coming out, in the next couple of days from China. It's going to be weak. Retail sales are going to be weak. But for me, how could we possibly think that consumption is going to pick up? Remember, consumption is over half of China's GDP in terms of contribution to. It's going to remain very tight, and it's going to be very, very difficult. This is not going to be a very easy reopening of China, as we're now seeing. And so, these GDP forecasts kind of get thrown away with the trash, and I think that's exactly what's happening here, especially in lieu of the CPI print out of the U.S.
Well, Damien, you know better than most how it works. You trade the policy change, and then you look for the results some way in the future. They're way out there. At the back end of 23, maybe. Damien, when do you expect to see the positive results of this shift in policy we're all witnessing in the last couple of weeks?
Well, I think actually what we may have to see is Beijing front load extension of credit into the economy during the first half of next year. I don't think the markets are really priced for this. If we see something akin to 2009, 2010 in China, where they're just basically throwing money at the issue in order to get this economy right-shored, I mean, things could get very, very interesting and quickly. And what that could do, quite frankly, and we mentioned this yesterday, is it could lead to inflationary pressures in the back half of 2023. So to your point, everyone trying to kind of map out what this means for the Fed. Imagine if they're seeing inflationary pressures out of China, which right now CPI is running at only 1.7%. We're talking 7.1 here in the U.S. It's significantly less than China with scope to rise from here.
Hey, Damien, wonderful, as always. Back with us, Matt Hornback, Troy Gayeski. Matt Hornback, inflation fading in America. Enter China. How does that influence your views on next year, Matt?
Look, John, our view of it is that if you're talking about inflation in China, you can talk about inflation in China. It doesn't necessarily have very big implications for inflation outside of China, just like the disinflation that we saw in China this year hardly had implications for inflation outside of the country. So when we think about China reopening, we do acknowledge that it's going to be a bumpy process. And in fact, I would say the bumpiest part of the process is very likely to be from where we are today over the course of the winter. It seems very clear to us that the policymakers in China have made some very tough decisions, but are going to follow through on those decisions. And that will set actually up a very nice reopening in the spring as it becomes warmer in the country, and the people have been infected. They're going out then, they start spending. The economy reopens more fully as we make our way through the spring. That should continue to improve the supply side, which we think will, on the margin, add to increasing disinflationary pressure in the U.S. as well as in other parts of the world outside of China.
Troy, good news or bad news?
Yeah, well, it's good in the short term for growth, a little bit negative for longer term inflation. But I think the big picture here, right, is the reason this inflationary cycle's been so problematic, right, is that once upon a time this is a supply chain issue, a commodity issue, and then obviously it's spread to labor and services. So to Matt's point, I mean, if you look at the principal pressures, it's really coming from labor and services, and that's why the Fed has been so committed. It's just much harder to break. So, I think we should applaud the good news today on CPI. Be realistic that some of the big disinflationary drivers like globalization and, China's labor pool opening up to the world the last 20 years are no longer there. And the Fed will struggle to get inflation back to 3%, but it does look like that's entirely possible given the progress that's made recently.
9 minutes away from the opening bell, equities up big time by more than 3%, echoing the kind of move we saw a month or so ago. The November 10th inflation report, where CPI delivered a downside surprise in this equity market, absolutely ripped into the close. Yields are lower now at the front end by 23 basis points to 4.15 on a 2-year, and this dollar is a whole lot weaker. Euro dollar right now, 106.62. Just enough time, guys, to talk about conviction trades into 23. Troy, I promised you the space to do it, so get there. What do you want to be? Where do you want to be into next year?
Hey, it's senior secured commercial real estate loans. I mean, if you look at what's going on in the real estate market right now, it's basically a wealth transfer from owner-operators to lenders. You want to be on the right side of that trade. I mean, ultimately, if you think of any lending strategy or credit strategy, they fought lower rates in the front end, particularly if they're floating rate, as well as tighter spreads for most of the last 10 to 13 years. And now both of those are going the right direction for lenders. You get the benefit of a higher yield in the front end. You also get the benefit to lend at wider spreads into lower LTVs. And so bottom line is, when you look at strategies that are in the Northwest Quadrant deficient frontier, anything that can make 7-8% pre or post-tax advantage, that can still benefit to some extent by the Fed hiking at least marginally more, that's a great anchor in your portfolio that can replace fixed income, can actually act as a substitute for equities, and you certainly want to roll up the capital structure in real estate right now.
And if you want Troy to explain what any of that means, give him a call, because we don't have time. Matt Hornback. Matt, final words, sir.
John, we've liked the dollar lower for a month or two now. We continue to like the dollar lower in 2023. And I would say the real opportunity in the interest rate complex is a curve steepener here in the U.S. We think the curve is much too flat for the type of disinflation that we're going to end up seeing in 2023. The bond market is entirely unprepared for something to come down, for inflation to come down this quickly. And the yield curve is much too flat. We should see a much steeper curve, John, led by the intermediate sector of the yield curve. Let's call it the 5-year point. 5s, 30s should disinvert, if you will.
It's a little steeper today, but because the 2-year is absolutely rocketing lower by 23 basis points. Matt Hornback, Troy Gayeski, to the both of you. Always fun. Thanks, gents. 4.15 on a 2-year. Your equity market up by more than 3%. Coming up the morning calls and later, the end of big tech outperformance. That's the view from BlackRock's Gargi Chowdhury. She joined us around the opening bout from New York. This is Bloomberg.
Consumers are very aspirational. You've got millions of people riding motorbikes, and they want to be riding inside cars. Vingroup, Vietnam's biggest conglomerate, has really tapped into that. The founder and chairman aspires to be the Elon Musk of Vietnam.
Vuong is Vietnam's richest man with outsized ambitions. He wants to sell cars not only to the Vietnamese, but also Americans and other consumers around the world.
If VinFast is successful, that goes very well with the ambition of the Communist Party of Vietnam. But if they fail, it will be very, very hard blow to Vingroup and also to the national economy.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
Just look at this move going into the Fed. Following a downside surprise on CPI, equities up 3% on the S&P, on the Nasdaq up 4%. Punchy stuff going into the opening bout. Let's get you some morning calls. First up, Citi, raising Nike's price target to 115, expecting the company to report a beat on stronger sales and margins. That stock is up by 3.8%. Goldman upgrading Pfizer to buy, price target 60, seeing potential for outperformance on new product launches. And finally, Piper Sandler raising Oracle's price target to 85, citing higher growth and free cash flow margin into next year. That stock is up by more than 4%. Coming up, stocks absolutely surging. Risk assets rallying off the back of cooler inflation. That conversation with BlackRock's Gargi Chowdhury next.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right, I will concede. I can see you've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
The Nasdaq has new rules. If you are short into the opening bell on a day that you get a downside surprise on CPI, apparently you get slimed, which I think is brutal. Equity futures right now up by 2.9% on the S&P, on the Nasdaq up by 3.9%. CPI, downside surprise. This equity market absolutely flying. There's your opening bell switch at the board in the bond market. Treasuries firmer, a whole lot firmer. Yields are lower on a 10-year by 18 basis points. You can call it 17 now. 343.58 on a 10-year. And this move on euro dollar, a ton of dollar weakness in the mix. Euro dollar 106.61. We're positive on that currency pair by more than 1%. 1.2% higher. That's some euro strength, some dollar weakness, and dollar weakness is dominant in G10 right now. Crude up by 1.7%, $74 and almost 50 cents. About 25 seconds into this one, the S&P up by 2.6%, the Nasdaq up by 3.6%. We've got to break down some big news this morning, not just the CPI report looking ahead to the Federal Reserve tomorrow, but Katie Line, some big changes this morning for Bankman-Fried.
Yeah, the hits just keep coming, John. Already he has been charged by the SEC of defrauding investors of $1.8 billion. And now the CFTC, the Commodity Futures Trading Commission, is also suing Sam Bankman-Fried, of course, the disgraced co-founder of FTX. The CFTC claiming violations of federal commodities laws over FTX. And of course, course, there already was a bit of a jurisdictional battle over the CFTC and SEC, who has control over what when it comes to crypto assets. But both of these regulators coming after Bankman-Fried after, of course, he was arrested in the Bahamas yesterday. That related to criminal charges that we are still awaiting the unsealing of from the Southern District of New York. We are expecting a press conference around that later on this morning, John. But of course, his arrest in the Bahamas yesterday and the request for him to be extradited to the United States means he will not be testifying as planned in the House Financial Services Committee hearing, which also begins later this morning. There are so many moving parts to the story and a lot of different people looking to take action against Sam Bankman-Fried for, again, what is alleged fraud.
Kayleigh, can we just talk about the timing of all of this? You've just gone through a range of issues there. At 10 a.m., this is not the 10 a.m. hearing we expected to have. No. That changed yesterday with his arrest. Then we're going to hear from the Southern District of New York. We've already heard from the SEC. We're hearing now from the CFTC. What do you make of the timing of this, Kayleigh, all at once, all together, ahead of what was meant to be a hearing on Capitol Hill with him?
There definitely has been some conspiracy theories, I would say, circulating, at least that I have seen on Twitter, about the timing of this, considering Sam Bankman-Fried was not just a player in the crypto industry. He also had become somewhat of a political force in terms of campaign donations and lobbying efforts on Capitol Hill. So that is something that, yes, you have to factor in the equation. But the fact that all of this is happening on the same day and, frankly, happening so quickly, remember, it's only been about a month since FTX declared bankruptcy. So all of these cases for actual charges to be being placed today, that timeline is much, much more accelerated and really speaks to the intensity of scrutiny on this particular issue, considering that there are millions of people who have lost billions of dollars in this episode, and a lot of people are looking for Sam Bankman-Fried to pay for that.
Kayleigh, thank you. As always, just wonderful. Kayleigh's going to stick with us. Make sure you don't miss this. Bloomberg Crypto today, 1 p.m. Eastern Time, 6 p.m. in London. Kayleigh Lyons, Matt Miller with a big show coming up. Big interview coming up in about 27 minutes' time as well. The CFTC Commissioner joining Alex Steele and Guy Johnson. Looking forward to that conversation a little bit later. We'll catch up with Shonali Basak down in D.C. in about 10 minutes' time, alongside Bloomberg's Anne-Marie Hordern as well. One stock I want to look at around the opening bar, because this is a big open. We've got United up by about 2.5% this morning. The company announcing a blockbuster deal with Boeing to buy up to 300 new planes. The take of the morning, without a doubt, from Connor Sen of Bloomberg Opinion, tweeting the following: weird. They violated the business rule that you can't make massive wide-body plane orders when the ISM is below 50 and the yield curve is inverted. That is a ton of sarcasm from Connor Sen. Businesses are still getting deals done, and you're seeing big investment as well from the likes of United with Boeing. We'll pick up on that story a little bit later. Another story I want to pick up on, Tesla. That stock has been hammered over the last week. Joining us now is Ed Ludlow from the West Coast for more. Ed, can you run us through what's going on here? A little bit of relief for investors this morning. The stock's up by 3%, but this market's absolutely ripping anyway. What's your thoughts on what's taken place in the last week?
I mean, broadly speaking, the automotive sector or group has been downtrodden because of high inflation, right? And so the CPI print, you see an immediate reaction across all names. Tesla's included in that, up by about 3.3%, biggest jump in almost 2 weeks. And it's kind of reversing some of the losses that we saw Monday, which took that stock to a 3-week low. A lot of headlines. You know, investors are trying to make sense of the direction of travel of this stock. We're now trading at 30 times projected earnings, which is the cheapest this stock's been since listing, which is something strange to say out loud, but, you know, that chart tells the story. It's true. I think the S&P 500 trading at around 17 times projected earnings. You can still see there's a premium when it comes to Tesla. There's concern, right? I think that a lot of influential voices in the Tesla community, retail investors, sell-side analysts, institutional investors that I speak to, are concerned about the Twitter overhang. Not just that this potential move by Musk to swap out some of the secured or unsecured debt, for margin loans, which would be secured against Tesla stock, but the idea of key man risk is still there. Another interesting Bloomberg report overnight, John, SpaceX is doing a tender offer, $77 for insiders to sell shares, valuing the company at around $140 billion. I think the big question we're asking ourselves is, if SpaceX proceed with this tender, does Elon Musk sell? And that would, of course, impact his wealth, because SpaceX is a big chunk of it. Just real quick, John, go to Rich Go on the Bloomberg Terminal, Bloomberg Billionaires Index. There's $900 million that separate Elon Musk, who's in top spot, from Bernard Arnault. And And obviously Tesla stock going upwards at this moment in time, but that could change any day depending on what happens.
Ed, thank you. Just one of those rare cases where someone thinks their company is worth a whole lot more in private markets this year compared to what's been happening more broadly in markets in general. 6 minutes into the session, we're up by more than 2% on the S&P 500. Across the board, looking at the sector breakdown, we're positive. From consumer staples, where the relative underperformances were up by about 1% there. The outperformance from communication services up 3.6%. Information technology up by 3.3%. BlackRock's Gargi Chowdhury joins us now. Gargi, you've had about an hour to go through this inflation report. What do you make of it?
Hi, good morning. Good to be here, John. So policy is working. Everything that the Fed has been doing, as difficult as that has been for the markets, what the inflation data today shows us that it is going in the right direction. We are seeing core and headline inflation move lower. And one of the things that I have been looking for is that core services X of shelter inflation. And of course, Jay Powell told us to watch that. And that is moving lower. So overall, this is a very good first or second step that the Fed will be very comforted by, but it is not the end. This is not the time to get complacent. There is a lot more to do. And I think, tomorrow I'm sure we'll talk more about that, but tomorrow we'll hear exactly that from the Fed. Sense of relief, but it's not over yet.
Well, Gargi, let's talk about the regime change. I heard from Philip Hildebrand of BlackRock, was reading through some of his comments this morning, who said, we've gone through this regime change now that even into next year, the bonds won't work in the way that people think the bonds will work. Now, I can tell you the bonds overwhelmingly are working this morning, and you can see that on the screen because I've got a two-year yield down by about 18 basis points. But can you speak to that, Gargi, just a little bit more?
Sure, of course. And we came out with our iShares investment strategy outlook guide as well, where we are talking about the theme that, John, I've spoken in your show before, where we've talked about this yield of dreams and this idea that we've moved away from the regime of TINA, where there was no alternative or is no alternative, to the new one where bonds are back. Where they are back, though, is in the very front end of the curve. And obviously, we're seeing a move like this today, which is good, which is exactly what we've been talking about. But I think that we have to remember, and I think this is what we talk about when we talk about this newer regime, is that we're not going to go back to the pre-pandemic zero rates anytime soon. In a world where inflation is likely to rest in the 2.5% to 3% core inflation, for the next couple of years, instead of a 1.5% to 2%, rates are likely to be higher for longer, not lower for longer. And that is the new regime. So even though today on our Bloomberg screens, we are seeing a tremendous move across the Treasury curve, which is exactly what we would expect to see. And obviously, given the valuation in fixed income, it makes a lot of sense for investors to be gravitating to income-owning parts of the market. I would still say that we should brace ourselves to stay in a regime of higher for longer, not lower for longer. And what I mean by that is expect to see the Fed tomorrow tell us that we're going to perhaps move interest rates up to sort of somewhere around the 5% range over the next couple of months, and then stay there for some time instead of immediately coming back down to below 4.5%, which is unfortunately what the market's pricing in now.
Well, you're certainly pushing back against some of these moves we're seeing this morning then. On the S&P, we're up by more than 2%. On the NASDAQ, we're up by more than 3%. You mentioned that rally in the bond market. Yields are lower on a 10-year by 15 basis points. On a 10-year right now, 346. On a 2-year, we're down 18 basis points to about 420. I'll stay on top of the price action. Got to stay on top of some of the charges being leveled against Sam Bankman-Fried as well. We heard from the SEC a little bit earlier this morning. In the last 20 minutes or so, we've heard from the CFTC. We're also waiting for some detail from the Southern District of New York. This New York court, that indictment against Sam Bankman-Fried has been unsealed. We're waiting to see, Kaylee, whether we get a little bit more detail in the next couple of minutes, but I imagine everyone's scrambling to pour through that.
Yeah, I'm trying to get my hands on the indictment right now, John, but we understand from the Associated Press that Sam Bankman-Fried has been charged with wire fraud, money laundering, violating campaign finance laws as well in an 8-count indictment. So again, we will look, John, for what all of those different counts are, confirmation from the Southern District of New York, and we are expecting a press conference to be held not too long from now, around 10 a.m. Eastern time. But again, that indictment in the Southern District of New York has been unsealed at this time, John.
What a busy morning, Kelly. We'll come back to you in just a little bit. I want to go back to this price action. On the S&P, we're up by more than 2%. On the NASDAQ, we're up by more than 3 percentage points. Tech is outperforming today. But we've heard a lot of people tell us this week that maybe that's not a story that's going to continue. We caught up with Dan Suzuki of RB Advisors in the last 24 hours. Take a listen to what he had to say about tech leadership.
Bear markets always signal a change in leadership. This is still the area of the market that's the most expensive area of the market. Expectations are too high. You're not going to see, even in a bull case scenario, you're not going to see the trajectory of earnings growth that you saw over the last decade to justify, that performance. A lost decade is par for the course.
Gargi, I think you might agree with some of that. You said the accommodative monetary policy that drove the decade-long outperformance of growth and large-cap technology in particular is over. Gargi, just a final word on that. Speak to me about it.
Yeah, I think that we got used to over the last 15 years this idea that real rates are going to stay zero to negative for a long, long time. And whenever we get in trouble, the Fed's going to come and slash rates to zero. And that obviously is amazing for multiple expansion in the longest duration part of the equity market. We are no longer in that regime. Rates higher for longer, good for clipping coupon, bad for, I think, some of these longer duration, large cap tech type of names, till the Fed tells us that they're going to cut rates. And I think we're far away from that. So for now, I think the areas of the market where you are likely to do better is in the value sectors of the economy, which tend to do better as rates remain higher. So look at value names, look at IWD, look at small caps and mid cap names as well, if you're really looking to add some risk to your equity portfolio. But the highest conviction trade I still have remains that bonds are back and own front-end fixed income and credit.
Gargi Chaudhry of BlackRock, thank you. As always, your equity market right now up by more than 2% on the S&P and the Nasdaq up by more than 3 percentage points. Massive rally into the bond market off the back of this move on CPI. Downside surprise, yields lower, a whole lot lower. Coming up, the charges piling up for Sam Bankman-Fried.
Is really a landmark case, and it will, in many respects, define crypto regulations for exchanges going forward.
That conversation up next.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Inflation hasn't been this high in the UK since 1981.
Then surveillance for in-depth analysis.
Jonathan Farrell, Lisa Bramwitz, and Tom Keene, thrilled you're with us.
Inflation in the United Kingdom, brutal.
Underlying food inflation doesn't appear to be that bad.
It ties back to the tenuous situation of what we're looking at with respect to energy.
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game.
We've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that this is something that many business leaders are focused on, and time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Alex, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg.
Connection lost.
What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Justice seems to be, in process, which I think is welcomed by those in the crypto industry. It's actually moved very swiftly. I mean, this is actually all happening in just over a month, so they've definitely moved very quickly. There's really a landmark case, and it will, in many respects, define crypto regulations for exchanges going forward.
The charges piling up for Sam Bankman-Fried. Charged by the SEC for defrauding investors of $1.8 billion, the chair Gary Gensler saying in a news release the following: "We allege that Sam Bankman-Fried built a house of cards on a foundation of deception while telling investors that it was one of the safest buildings in crypto." An indictment this morning also from a federal court here in New York alleging, quote, Bankman-Fried agreed with others to defraud customers of FTX.com by misappropriating those customers' deposits and using those deposits to pay expenses and debts of Alameda Research. Your team coverage starts right now with Bloomberg's Anne-Marie and Shanali Basak down in D.C. Katie Lyons alongside me here in New York. Katie, first to you. You're going through that indictment, unsealed this morning. Walk us through the headlines.
Well, there's a number of them coming out, many charges in total here in the Southern District of New York, including wire fraud and conspiracy counts, as well as Sam Bankman-Fried being accused of campaign finance violations. And that, John, one that is probably going to be of great political interest, especially with the hearings on Capitol Hill today, because remember, he was one of the largest donors in this midterm election cycle in 2022. When you go through the indictment itself, as I said, it is very extensive, but they say from at least in or about 2019 up to and including or about November 2020 in the Southern District of New York and elsewhere, Sam Bankman-Fried willfully and knowingly did combine, conspire, confederate, and agree together with each other to commit wire fraud in violation of Title 18. And it goes on to talk about the conspiracy knowingly having devised and intended to defraud investors and obtain money for property, false means, and fraudulent pretenses, reputations. A lot of legal jargon here, John. Of course, we'll continue to work through it. But again, many charges filed against Sam Bankman-Fried here in the Southern District of New York.
Kelly, you keep reading. I'll come back to you in about a minute's time. Shanali, this one's unraveling really quickly in the last 24 hours.
In the last 24 hours, think about what a flurry of news we've had from the SEC to the CFTC. I am standing right outside of the House committee that is going to be talking to the new CEO of FTX to ask him how all of this had happened as they try to figure out how they make rules going forward ahead. Remember everything that Kaylee was saying, not only about the charges that he's facing from the Southern District of New York, which are criminal counts, by the way, John. In addition to that, there's that campaign finance aspect where a number of the lawmakers that will be questioning the new FTX CEO have taken money from Sam Bankman-Fried. And by the way, the same goes for agriculture, which is more closely linked to the CFTC. Tomorrow you'll hear from the Senate. That includes Sherrod Brown, who has voiced skepticism in the past about how these new laws will be handled with such intense lobbying that has been done, including from companies such as FTX, as they make new laws that govern this industry. But for now, we know a lot of information from these complaints in terms of how Alameda, the hedge fund tied to Sam Bankman-Fried, had essentially an unlimited line of credit when it came to FTX and the use of its customer deposits as it looked to fill trades.
AMH, you heard it, that line, campaign finance violation.
Yeah.
Your thoughts?
Well, John, I'm just reading it now. It says, from the start, Sam Bankman-Fried improperly diverted customer assets to his privately held crypto hedge fund, and it goes on and said, use those customer links to make undisclosed venture investments, lavish real estate purchases, and large political donations. That is a massive embarrassment for all these lawmakers on Capitol Hill that has received campaign finances and donations from Samuel Bankman-Fried. Now, Jonathan, we should also note, besides the fact that he was one of the biggest, the second biggest actually in this election cycle outside of George Soros, his top deputy as Shanali said earlier in surveillance, was giving at the same rate as individuals like Peter Thiel, a name we don't hear all the time, but his top deputy was also giving to Republicans. So more than $60 million was given this election cycle from these two executives at this company. And already what you see is politicians starting to backtrack and unwind and saying they're going to be using those campaign donations and give to charitable, either side of the party. But it's an incredibly embarrassing moment, Jonathan, especially because he was supposed to be their star witness today to really show that they were going after him, and there was no bias. But of course, this is the first time Congress is really getting a handle and being able to go after this collapse we saw from early November of this company and FTX bankruptcy, but their star witness is not going to be there. So, you know, Maxine Waters wasn't too happy about that.
Kelly, some of this is absolutely scathing. This quote, Bankman-Fried was orchestrating a massive years-long fraud, diverting billions of dollars of the trading platform's customer funds for his own personal benefit and to help grow his crypto empire. Katie, you've had a bit more time to read the document. Walk us through it.
Well, there's 8 counts in total, and as Shanali correctly said, these are criminal charges, including conspiracy to commit wire fraud on customers, conspiracy to commit wire fraud on lenders and actual wire fraud on lenders, conspiracy to commit commodities fraud, securities fraud, money laundering, all of these conspiracy, and then finally, which Anne-Marie was just discussing, conspiracy to defraud the U.S. and violate campaign finance laws. And John, as you rightly point out, in these allegations, as well as the charges placed by the SEC, they say this was a years-long effort. We're talking back to 2019, that this wasn't just some episode that all started and really began in November, that this was a concerted, knowing effort on the part of Sam Bankman-Fried for years as he dealt with not just FTX, but Alameda. And this really goes against what Sam Bankman-Fried has been saying this whole time, which this was accidental and he did not knowingly commit fraud on anyone. The Southern District of New York, the SEC, and the CFTC all today saying they beg to differ.
Kelly Light, Shanali Basak, AMH, 3 of the very best on this story. That hearing's coming up in about 7 minutes' time. It's just not the hearing we expected about 24 hours ago. Coming up on this program, the market moving events you need to be watching. That'll be next in our trading diary. This equity market absolutely ripping. From New York, this is Bloomberg.
much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Five minutes into the session, equities pushing higher off the back of a softer than expected inflation report in America. Yesterday on the S&P, biggest one-day pop at a close of the month so far. We're looking to beat that today. We're up by 2.76% on the S&P, on the Nasdaq up by 3.84%. You can guess what's happening with bond yields. 2s, 10s and 30s looking a little something like this off the back of that inflation surprise to the downside, softer than expected. Yields lower at the front end by 22 basis points on a 2-year. We are down to 415.98 on a 10-year. We're down about 18 basis points to 342.85. Just a snapshot of the price action. Let's get you the trading diary. The president will have things to say on the inflation report at the White House at the top of the hour. Look out for that. The FTX testimony on Capitol Hill goes on without Sam Bankman-Fried. A Fed rate decision and Chairman Powell news conference coming up tomorrow, followed by decisions from the BOE and the ECB on Thursday, plus another round of jobless claims. And in the mix, retail sales and PMIs to close out a week. From New York, that does it for me. Thank you for choosing Bloomberg TV. Good luck for the rest of the trading day. This was the countdown to the open. This is Bloomberg.
Is there still room for Abenomics to be carried out in full in the way that Shinzo Abe imagined it?
The economic situation that Prime Minister Kishida faces today is very different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women. One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs to be done to quote-unquote revitalize Japan.
The secret success of any company is to grow. And I think that we, WPP, and our industry more broadly, can be really at the heart of a client's growth. You know, how do they succeed with consumers? How do they reach them in new areas? How do they innovate? How do they create new brands?
Television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close. Welcome to Bloomberg Crypto.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look. in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded, It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010 after staying for almost 1 year in the hospital. He died of complications due to failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venergold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Venergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Venergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.